But let's go ahead and dive into it. Good morning, ladies and gentlemen. I know I've been talking to half of y'all this morning, but I got to bring that heat, bring that energy with a big ol' alpha. Day trading, soon to be dissolved. Good morning and happy, freaky, funky, fantastic Friday. Super excited to be here as always. Cannot wait to get to work with you guys and crush the market. We got one final day of the month, so let's make sure we end this month, end this week, and end the freaking quarter strong and profitable. And I mean, I tell you what, so far this week, you guys have been on fire. Really have been. I mean, look at Logan yesterday, his very first $1,000 day in profits. I mean, it's an amazing milestone to hit. Logan's been on fire. Tim, as always, crushing coin. You got Tom in there, Kenyana. I mean, there's so many traders inside of the community this week. Absolutely on fire, locking in some amazing profits. You guys are just amazing. So keep up the awesome work, and let's make sure that we end the month, the week, the quarter strong and profitable. So the theme of today is what? It is capital preservation. That's been the theme of the entire week, is preserve the capital. Don't give those profits back, right? That is definitely where your mind should be today, is capital preservation. Don't give your profits back. Make sure you end the month profitable. And if you can add a little bit more to the bottom line, let's add a little bit more to the bottom line, right? So we're going to dive into it. We're going to talk about what we got going on for today, get you guys prepared, make sure you guys are all set, ready to rock and ready to roll. So let's go start with the economic calendar, talk about what we got going on for today. And again, today's Friday, June 28th. This morning, we did have some data released. We had core PCE and personal income data, right? So if we look at core PCE month over month, we came in line with the forecast. If we look at PCE month over month and year over year, we were in line with the forecast, right? Look at personal income and personal spending month over month. Personal income, about 0.1% over the forecast, and then personal spending month over month, about 0.1% under the forecast. But core PCE came in line, right? Here at 8:40, so what was that? Probably 22 minutes ago. You do have a Fed member speaking. You got Fed Daily speaking right now. Coming up today after market open, 9:45, we do have Chicago PMI. That is definitely some type of data we've seen move the market before, so be mindful of that. Got some key data dropping at 9:45. And then you do have more data being released here at 10 o'clock, and that's going to be Michigan consumer sentiment data. And 100%, that's definitely the type of data that we've seen really move the market. So your first 30 minutes, you're going to have two pieces of economic data being released. So be very, very mindful of that. After 10 o'clock, we are pretty much in the clear until noon, right? 12 o'clock, we do have Fed Bowman speaking. Here at 12:40, again, we have Fed Daily speaking again. So 9:45, Chicago PMI data. Be mindful of that. 10 o'clock, we got Michigan consumer sentiment. And then we are in the clear until 12 p.m., all right? Well, let's go talk about the SPY. Let's talk about what we got going on for today and take this time to get you guys prepared. See where the best of the best of the best opportunity is gonna be. So, couple zones that I want to go ahead and show you guys and get these marked up. All right, so first zone here is going to be between 546.96 to 547.15. We're basically getting yesterday's high a day, the high day from June 24th, the close from June 20th, the open here from June 18th, and the close here from June 17th. So you got this zone right here with 1, 2, 3, 4, 5 touch points in it, right up against yesterday's high day as well. That, to me, is going to be our line in the sand. That's going to be a make or break for today, right? We hold that zone of support. We got a lot of room up to that next zone. We fall below the zone and stay below this resistance. We got a lot of room to the downside. So that's going to be my line in the sand for today. And again, that zone is between 546.96 to 547.15, right? This top zone here is between 548.49 to 548.63. Then other than that, all you can really do is just grab some basic price levels, mark up the open from June 20th, and then go mark up the all-time high up there from that high day from June 20th. That puts you at 550.13, all-time high. And then that candle open here, that price level at 549.44. And then we do have this lower zone that we should keep on watch today as well. That's going to be down between 545.20 to 545.37. And where we found that zone, again, using yesterday's open as our reference, looking left and seeing, hey, we also had Tuesday high day where we got rejected. Wednesday off that zone, we saw decent price action intraday off that zone. And then it was also that low of day there on Thursday the 20th. And then looking at Friday 21st high day, there was also some good intraday price action off that zone. So feeling pretty confident and convicted that that's going to be a good zone to keep on watch for today. And again, that's down here between 545.20 to 545.37. So I've done all of my higher time frame analysis. I've identified all of my most key significant zones for the day. And then I just literally go down into my lower time frames, continue to fine tune my analysis, and really make sure that I've got my zones and analysis dialed in where I'm confident and convicted. So going down into my lower time frame, I see where we're currently at, where we could be opening. Now I'm going to start to build some what if plans. You know, what if the SPY goes here? What if the SPY goes there and does something, all right? What are my expectations? What would I like to see? What are some initial hypothetical plans that I could have pre-built before market open, right? To be one step ahead. So we have this line in the sand between 546.96 to 547.15. That's a make or break. We're going to be opening pretty close to that level. That's a key level that I want to keep on watch. One of two things are going to happen, okay? Number one, we're going to open, come down into that zone, hold it to support, and maybe have opportunity to play this long. Where to? That next zone of daily resistance, okay? Or we're going to come down to that zone, crack below it, possibly come up and back test it as intraday resistance. And if we see that take place, we are simply looking to get short down into that next lower zone of support. That's going to be your first set of two game plans. One long off that key line in the sand zone, and then one short. If we crack below it and retest it as intraday resistance, that would be the opportunity where we look to get short. And that's where I'm going to, basically stop, right? We can build a game plan based on this level up here and a game plan based on that zone down there. But the way I see it is we got about, 23 minutes to market open, and we're going to be opening pretty close to that zone. So that's going to be the main area that I want to be watching right at the start of the day. So I want to focus on those two initial plans that I built. One long if we hold the zone, one short if we crack and retest that zone. Okay, so those are your initial game plans to start the day here with the SPY off that line in the sand, a key make or break level for today. 546.96 to 547.15 is your zone. So that is the analysis on the SPY, and those are going to be your first two game plans for today. All right, moving on to the Qs, okay? Qs today, quite a bit of a difference. Last 2 days on the SPY, more of a challenge to chart it, analyze it. Qs have been easier. Today, the roles have flipped. Today was easy on the SPY. Today with the Qs, I'm just not really digging where we're at and what we're looking like. So where is most of my focus going today? The SPY, not so much the Qs. But a couple zones and a couple levels that I want to point out. Here on QQQ, I do have this line in the sand between, can't even talk right now, 483.11 to 483.43. Okay, that is going to be my line in the sand for today. 483.11 to 483.43. We got this lower zone of support down here between 481.20 to 481.62. And then our lowest zone of support for today is all the way down between 479.31 to 479.63. Some overhead levels of resistance. First key zone of daily resistance that we actually pushed up into after data and got rejected hard off of it. That's a key level. Up between 484.99 to 485.23. And then all-time high resistance here on QQQ is going to put you up at 486.84. So you got your one zone of overhead resistance, then you have your price level up against those all-time highs at 486.84. You got your two lower zones of key daily support, and you got your line in the sand here on QQQ. And the line in the sand is just basically off of yesterday's high a day, and then that low of day from June 18th. So yesterday we came inside of that little fair value gap here on QQQ. We actually saw a nice rejection off of that fair value gap on the Qs. And so then we actually closed below that daily fair value gap. We left this nice big upper shadow, and then I can still see we have that low day and that high day that could be a nice barrier of resistance or support for today in between those 2 points. So I'm going to label that as my line in the sand for that reason. And plus, if we get above that zone and hold it, there's great room to the upside. Stay below the zone, can't get above it, there's going to be some decent room to the downside. Really just based on yesterday's high a day, and we have that other connection point right here as well. So it's a decent little zone. It's not the most significant zone that I've ever seen, but it's definitely a good starting point, and it's definitely a level that I really want to keep on watch today as my line in the sand, and just kind of see what the Qs do off that level, if anything. So game plan is going to be, the Qs open on up below this zone, which right now it looks like we're going to. We push up into that zone, and we see good price action and good price development, suggesting there are more sellers than buyers present at that level, and it validates that zone today. That would be an area where I would look to get short, expecting to see some downside into that next daily zone of support. Okay, but if we are to open below the zone, for example, and let's say we have a strong snapback above that zone, pull back into it, and we see that, hey, there are definitely more buyers than sellers present at that level, and we hold it as intraday support, that'd be a zone that I would look to get long off of, expecting we see a little bit of upside into that next daily zone of overhead resistance. Okay, so that's going to be your two game plans for today on the Qs based on that line in the sand here on QQQ. Okay, you guys should be all set, dialed in, ready to rock on the SPY and the Qs. Other than that, I went through like 70, 80 stocks and scanned them like I normally do on a daily basis. Literally nothing stood out to me today. And that's rare where it's like nothing stands out. My focus is just going on the SPY and the Qs. Literally nothing stands out to me at this point in time. NVIDIA, still got to kind of keep it on watch today, but the short trade presented itself yesterday, and that was the best opportunity to get short off that 126.55 level. If we do come back up into that zone again today and we see really good price development, good price action, there could be another opportunity to get short off that zone, but it will be the second touch and the second attempt to get short in that zone. The first one's always the best one. The second one, I just lose a little bit of confidence, not as, certain that, hey, this is a high probability zone I want to get short off of. It's the second attempt or the third attempt or touch at that zone. To me, it just starts to become a little bit weaker, and we see less accuracy off those zones after the first valid trade presented itself. And so, for example, yesterday, that trade did present itself, and it played on out. So I'm a little, not say 50-50, but I'm just not as confident to get short off that zone like I was yesterday to get short off that zone. But I do want to watch it, because if we do get to that zone and we notice additional reasons to take that trade and it looks proper and it's solid, yeah, I would entertain another short off that level if it really stands out, if price action really looks good, and we can identify maybe another couple of reasons on top of this to get short. I still think that could be a high probability area that NVIDIA fails to get through, and maybe we can see a little bit more downside today. But I need to see quite a few more reasons to feel good about shorting off that zone. So just an area that I do want to reference and keep on watch for today, right? That's up between 126.14 to 126.52. And again, I'm just watching it. Not going to really build a game plan yet and say, hey, if we come up here, top out, roll over, I'm getting short. I want to see NVIDIA open, want to see it develop and move a little bit. And if we get into that zone, my goal is how many other separate reasons can I identify that maybe validates a short trade? And if price development and price action starts to really validate the trade, I'm more than happy to take it as long as I have multiple reasons to take that trade off that zone. Not just looking to get short off the zone, but have another 1 or 2 reasons established on that trade as well. Okay, so we'll be watching NVIDIA, a little bit of a back burner here for today. Other than that, still just kind of watching Shop. I closed that trade yesterday on Shopify. Looks like we are going to be gapping up a little bit here this morning. So if you are still in that swing trade on Shopify, I mean, you're looking pretty good, right? You want to see it pop through $67. And I think today you can hit your first target of 68 on Shopify. Really wouldn't want to see Shop back below yesterday's close, right? So we had a nice little close there at 66.38. Looks like we're going to be gapping up a little bit. If we do see any kind of a pullback, I just wouldn't want to see it pull back lower than yesterday's close. I would want to see it hold yesterday's close as support and then maybe start to see that next leg on up, all right? So I would just reference yesterday's close as one of your key levels of support that you would like to see Shop stay above. Because the way I look at it is if we come below yesterday's close, right, and we stay below it as resistance, we're coming back down to our cost basis, right? So I would rather be getting out here, taking what profit I have versus letting that trade go back and stop me at break even, but still give this a chance to see, can we move on up to $68 today? And that's still a very realistic target that could be hit today on Shop. So you guys still have that swing trade. You're just going to be managing that swing trade at the open. You guys have a game plan on how to manage it. You do not want to see Shop go below yesterday's close. You want to see that level hold as support. And you have a $68 target today that realistically can get hit. Okay, and then I'm still managing my trade on CSCO. I took a swing trade yesterday on Cisco. So some of my focus here at the start of the day is going to be also managing this swing trade here on CSCO. So basically what I want to see CSCO do is hold above this zone intraday as support between 47.46 to 47.51. That was yesterday's high day and close. We're going to be gapping up a little bit here. So if we do have a nice gap up and we see an initial washout where we see, some profit taking, I'd like to see it come back down to that zone, but see a strong reaction out of that zone. That's going to be a key level for Cisco today. So as long as we see that gap up, maybe we get a pullback into that zone. As long as we hold that zone as support, I'm going to continue to hold CSCO as I expect to see a little bit more upside. First target, 47.84. And then from there, I got a main target way up here in the high 49s, like close to $50 up against that 200 SMA that could be getting hit coming into like next week. So first target today to scale out and maybe take some profits, depending on what we do at that level, is going to be that 47.84. Do not want to see it below this lower zone of support. And if we do see it dropping below that zone, failing to get back above it, that to me looks pretty weak. And I'm going to start closing this for profit. I got in yesterday right here. Even if it cracks that zone and retests it and I get out, I'm still able to capitalize on that much movement, right? But I still want to manage this trade and give it a chance to see if it can move higher. So don't want to see it go below that zone. As long as we hold it, I do think that 47.84 level realistically will be getting hit today. That was my first target. And then from there, over the next week or two, continue to hold some of this as a runner, maybe up towards around that daily 200 SMA. All right, that's on Cisco, CSCO. And then again, other than that, just nothing really stood out to me, right? So going to be managing my trade on CSCO, going to be helping you guys manage your swing trade on Shop if anybody is in that. We got NVIDIA on a back burner for today. And then we got the SPY and the Qs ready to rock and roll. Most of my focus going on the SPY right at the start of the day. SoFi, yeah, I mean, I know it's a classified as a penny stock, right? Because it's under that $20 threshold, but I like SoFi. I own SoFi long term. But the one thing, is every time I come across SoFi, because it's on my watch list, every time I come across it, I'm like, first glance, do I see anything? No. Are we moving? Is there volatility? Do we see an influx in volume? No, no, no. Do I really want to take the time to analyze this and try to find a reason? Probably not, because I don't really see a whole lot at first glance. There could be something, but again, at first glance, I just see limited opportunity to the long side and to the short side. But when I look at a stock that I clearly see is moving, I start to notice there's opportunity to take trades when the stock is moving, right? We clearly see it's moving on up at that point in time. Here, it's clearly moving on up at that point in time, right? That's the type of movement that I want to see on a daily that suggests, hey, there could be some opportunity today. You look at SoFi over the past, 4 or 5 months, we have just been tight, congested, choppy, and just fading. And so there's just going to be limited opportunity here on SoFi, in my opinion. So let's just analyze it real quick now that I've set my expectations. We are trying to hold this little zone of support. We had that gap up, high and open, strong rejection, came back and retested that level here back in November. Nice support level, big rip to the upside. Now we're coming back into it again, and we're trying to set up with a little bit of this daily higher low back inside of that zone. We can clearly see how we fell below that zone, but snapped back inside of it. And now we're starting to see a bit of this daily higher low formation take place right inside that zone, which could lead to a nice push to the upside. So is there opportunity? Maybe. Maybe we can see that daily higher low push and see some upside. Okay, where do we think it could get to? I would say probably back up towards around this area right here. Some of these prior daily lows and that 20 EMA resistance. And I look at, SoFi, it respects the 20 EMA. It respects the 20 EMA as resistance. If I really look at this and I'm like, all right, let's say I do get long today, expecting to see a push off that daily higher low, and I get long at 654, where's my first target? Probably the 200 SMA at 667. A whopping 12 cents of upside just doesn't scream opportunity to me, right? Even if we get to the 50 SMA, it's up at 697. So you're trying to bank on, maybe 40 cents on a slow moving stock that may take a couple of days to move that 40 cents. It just doesn't scream opportunity to me, right? As far as like a short-term swing trade or a day trade. And really looking at this at first glance, I don't yet see any indication that we could see a proper, like longer term horizon swing trade where maybe we have a swing over the course of, say, 6 to 12 months. I just don't see anything on the chart that indicates, hey, this could lead to a lot of upside to like $8, $9. Let's get long and manages over, 6 to 12 months. You know what I mean? Nothing just yet that really stands out to me that suggests a longer term swing trade. I can see something that stands out that suggests maybe a day trade opportunity or a short-term multi-day swing trade. But when I really analyze this and I look at like truly upside into these targets, into these resistance levels, how much can I really get? Maybe 10 to 40 cents. I just find there to be better opportunity, in my opinion, elsewhere to be able to capitalize on much more and just have more clear opportunity. So just with that being said, I'm kind of starting to see a possible little reversal on the daily, a little bit of a push off that higher low, and I like that. But when I really look and see like where can this thing truly go to the upside, it's just limited opportunity, which doesn't really excite me to want to pay attention to SoFi here. So that's what I see. That's my analysis, and those are the expectations that I would set there on SoFi. Steve says I can debug existing code with trial and error. Yeah, maybe we can work together and figure something out. Snow, thoughts on a swing trade? Yeah, I mean, let me look at Market Mastery real quick. Make sure no one typed up inside of that. Yep, we got Tom with SLB. Let's go grab SLB first. SLB. Let's clear this out. Looks like it may be starting a little bit of that moving average squeeze on the daily. It's getting tight in between those two moving averages. Nice little daily double bottom. We broke that prior swing high, so we made a higher high. which is really nice. You're in a nice downtrend, downtrend. Then you find market structure, double bottom. Then you have an impulsive move to the upside, making a higher high. Our goal is to try to figure out where that higher low could be to catch the second leg to the upside. Because this right here was leg number 1, right? We made that higher high. Now we're just looking to see where could we pull back to, find a higher low before we see the second leg on up. So that's really the goal, what we're trying to accomplish here, and see where the best entry could be. So I want to take a fib retracement from that swing low up to that swing high to start. Next, I would like to mark up that little hiccup candle, that daily hiccup candle. I really like its location. You had all this previous daily support. You dump below it, retested it as resistance. You got rejected, retested it as resistance here. You got rejected. You gapped in that zone, and then you pushed out of that zone, creating this daily hiccup candle. We talk about hiccup candles on the 1 minute and 5 minute. You see how respected they are? Now look at a hiccup candle on a daily time frame. When it lines up with previous levels as well, that's a very, very significant zone, right? And I'm building a lot of, conviction in the zone, taking the zone back even further to like June of 2023, where we had a lot of daily support in that zone even back there. So I'm very convicted that this is a high probability zone to get long off of, okay? That's going to be between 45.44 to 45.99, right? You get your 20 EMA right at 45.77, and you would have a 38.2 retracement right at the 20 EMA that's inside of that zone. So right off the bat, you have 3 confluences that suggest a possible entry down around 45.77. Why? Because 45.77 is inside of that daily zone of support. It's right off the 20 EMA, and it's up against that 38.2 retracement. So I would say like an optimal entry point here on SLB would be back down around that 45.75 if we can get there, putting stops below all of that support, right? And again, trying to get an idea of where we could be going next to the upside. So we don't really have the 3 points we need just yet to do any kind of like extensions to extend targets to the upside, which we wouldn't really want to do that anyway when we have better, more realistic price targets just based on past chart history. But I always like to get an idea based on fib extensions, and if those extension levels line up with previous zones, it only just builds a little bit more confidence and conviction. But I would say like realistically, like up here to like 48.62 to 49.15, because my expectations would be to see a higher low push and see the second leg up and eventually break over that prior swing high. So I would say a very, very realistic target here on SLB would be that zone right up here between 48.62 to 49.15. That would give you a potential 4-to-1 risk reward if this sets up on SLB. So I would watch it, try and get long down around that 45.75 if we get there, run about 70 to 80 cents of risk, put it below all of that support, and then look for a target up at like that 48.80 region. Gives you about 3 points of reward, about 70, 80 cents of risk. Solid little 4-to-1 risk reward if we do see that pull back into that zone before getting that second leg to the upside. I like it. I can dig it. I think it's worth watching. And I'm actually going to put that on my swing trade watch list here just to keep that on watch coming into next week. I can dig it. All right, so SLB, we're good on that. Dantino on Snow. We got 2 minutes. We got less than 2 minutes, so we have to blitz through this. SNOW. Looking for swing trade thoughts. Gonna gap down, dump. Another drop off earnings. Here's what I want to do, because it looks like there could be a short. So from that gap down high down to this low, did we have a retracement right to the 50%? We dumped. Massive drop on off. I want to do the same thing here from that swing high to that swing low, drag it back up, and that gives me a lot of confluence. So I mean, I could see a short swing trade setting up, but not anytime soon. And there could be an opportunity to trade this long before it hits all this resistance. I mean, you got a lot of resistance up here between 142.25 to like 144.63. That's in line, pretty close to that 50% retracement. And that 50% level is right at the 50 SMA. And so you saw here last time, you had that gap down high, that dump. You saw like 50% retracement before seeing that second leg down. Very possible that we see another push on up into all of that resistance, right up against the 50%, right up against that 50 SMA at that daily zone of resistance. That would probably be your stopping point before maybe seeing another leg to the downside. So could there be an opportunity to play this long into that zone? There could be. And I would just say that we get a break and hold above yesterday's close and high a day and hold that zone as intraday support. That could lead to a continuation push to the upside into that zone. And you could day trade that or swing trade that for about 10 points to the upside if it sets up. But then I would be looking to get out because that's such a key level of resistance that we may be able to get short off of on snow. All right, market is open. We are live. Let's have an amazing day. Let's crush it. Let's have some fun. And let's end
SPY and
the
ES
month
are
with
coming
some
right
profits.
back into yesterday's hedge pressure.
Do what?
SPY and ES are about to retest yesterday's hedge pressure. It looks like they're just dropping straight into that 546 level for SPY.
Let's grab today's hedgies.
And then thank you for the reminder, Steve, because yes, next week is a short week. Wednesday is a short day, and Thursday we are closed for the 4th of July.
Oh, shoot. So half day Wednesday, Thursday we're closed. Yeah, it is a very short week.
Completely forgot about that until I saw his post. Appreciate that.
Still waiting to get those hedgies to load on up. Give me my hedge, precious. Oh yeah, one small thing too. Little announcement for you guys. Once these hedgies load, it says it's at 266. Yeah, that's not the case. A lot of great traders here. A lot of you guys are experienced. You guys use different platforms. You know the platforms, all this stuff, right? So we're actually going to start hiring traders to basically produce content for the community. So for example, let's say you use Webull, right? And you're really efficient with Webull and you know all the ins and outs and the tips and tricks. I would be willing to hire you and compensate you to put together a 30-minute long tutorial explaining Webull, right? So that we can host that inside of the community, inside of this platform. So for a newer trader coming in that uses Webull, they can go watch your tutorial about Webull and really help them out because I don't use Webull, for example. So that applies across the board. Platforms, tutorials, education, lessons, topics, anything like that. You have ideas and you're like, dude, I want to make some extra cash. Let me know. Let's figure it out. We'll go from there. Because I'm not going to take the time to learn Webull to make a tutorial around it. I'd rather just pay someone to do it.
Good morning, Josh. I'm sorry, did you mention anything about news or anything today?
Yes, we have 9:45 and 10 o'clock data. So okay. 9:45, you got Chicago PMI data. Then here at 10 a.m., you got Michigan consumer sentiment data at 10.
I wasn't sure you had mentioned it for anyone that may jump in on any trades, just heads up.
Oh, always discussing. That's the first thing we do, brother man. So what did we see the SPY do? Let's really break this down. All right. So we did all of our preparation. Check. We built some what if plans. Check. What's the next step? Waiting for the market to come to us. Is the SPY near one of our zones? It is. Check. So the next step, right? Assessing this zone. Do we think this zone could be support or resistance? I would say support. Why? We opened at the zone, we dropped below it, but we snapped back above it pretty quick. So I would have to think that if we pulled back into that zone, it could be support. And if we see that zone hold as support and there's more buyers than sellers, that would lead to more upside. Cool. So I can say this is probably a zone of support that I could look to get long off of. Great. What else do I have that suggests there's a high probability reason to get long off this zone if we were to pull back into it and hold it, right? What else do I notice? What else would we have, right? Well, the first thing that I could do is when we stop pushing up, I can run a fib retracement from the swing low to wherever the swing high is going to be and see, do I have a proper fib retracement that lines up with this zone? So that's the first confluence that I could do. I could even put freaking VWAP on here if I wanted to, right? Which I don't use indicators, but the VWAP's overhead. So that wouldn't really be anything that I could utilize. Are there any uptrends or downtrends? Right? I'm just doing analysis. I have an idea that we could pull back into that zone and hold it as support, right? Cool. Now I'm just doing all the analysis that I can do to really make sure that that is a pretty good area to get long off of. Do we have any trend lines there? We really don't. So there's no uptrends that line up. There's really nothing else that I can foresee right now. So the only thing we have at this point in time is a daily zone that could be support if we pull back into it, and a possible fib retracement from that swing low to wherever that swing high is going to be. Right? And the higher we push up, we just readjust that fib to connect that high. So that's all we're doing right now is the higher we move, we just readjust that fib, right, to connect that high to see where that fib's going to line up at if we start to see a pullback here. So that's all you can really do at this point in time, right? Market came to us, right, sitting at that zone. There was no trade opportunity here, just kind of messy. We got a big rip back through that zone. Okay, cool. If we come back to that zone, it's probably going to be support, right? I would want to get long. Okay, what confluences do I have? Right now, I only have a fib retracement. That's it. And now I just continue to do this. I continue to analyze, do my analysis, do my due diligence, and try and build a lot of confidence and conviction to get long if we do pull back into the zone, if I have those multiple separate reasons. Right now, I would only have potentially two, but honestly, the higher we keep going, we're just not really getting this to line up with any of our most important fib levels. So probably won't be able to use the fib if we keep pushing up even higher. But right now, the fib is from the swing low up into that swing high. If we can get some hedge pressures, maybe we got a 547 hedge pressure. That would be another confluence if the freaking hedge pressures would load. Let's go see. Let's log in again. Let's see if we had a 547 hedge. Ooh, that'd look good. Come on, baby, give me 547. 547. Load. Maybe if Scotty V's here, he's got that little graph from their Discord to post. I know that comes out before their platform loads sometimes, but I'm still not getting anything.
I love that thing. That chart is my favorite thing.
What chart?
This little diagram he posts
yeah.
that gives, hedge pressures for what is it? The Qs, NQ, ES, SPY, a couple other random things I haven't even looked at. It's very detailed.
Yeah, it's pretty cool. I like it.
Hey Josh, Don here.
What's up, Don?
I wasn't sure if just saw on Slack, Kevin was asking a question about gold GC1.
Okay. What was the question?
Oh, I wasn't sure if you saw that message.
A message inside of Slack.
He was asking if you could dial in a trend line on the daily for a downtrend line.
Oh, gotcha. Can you show me how you would dial in a downtrend on gold GC1? Gotcha. Thanks. And
Yes,
time frame, that is
something.
a... What time frame is that? That's a 4 hour.
Oh, it was a 4 hour?
Well, so I did it on the daily, and then I was asking because Sir was saying, he was telling me how it was invalid because my first 2 points were good, but the third point came and broke it, and then it respected and came back down below it. So I didn't adjust it to that third point, and I'm just looking for different insight or other insight
Yeah,
to see,
100%, man.
where.
So Matt, for example, like Matt with trend lines, he would count that as a point because it came up to it and it did reject off of it. Now, did it breach it a little bit? Yeah, it did. Did it hit it to the penny and then come straight down? No. But did we overall stop pushing higher off that downtrend and then drop? We did. So Matt would count that as a 0.3 and say now coming up to this 0.4, there's no trade here off of 0.4. There's nothing. It's just 50-50 on what the stock's going to do. Or because trend lines are super subjective, or you can say, well, you know what? That could be my downtrend, right? 0.1, 0.2, right? And that's still technically, valid because you have 2 points connected. And we could technically come up and, maybe hit that trend line and, get rejected. It's possible. You could also run your trend line just like this and still say, hey, that trend line is valid, and I'm going to count that as my 0.3.
Yeah,
This is
so that's
where-
the way I have it. And I wasn't doing for a 0.3 or a 0.4. I was just running the trend line to see where it was at and see how it lined up with other zones.
For sure.
The-
Supply
my
off of
2
the
cents
4
on this, Kevin, because we all do this slightly differently and we all have very high success rates. It depends on how you identify with the market, what type of trade you're shopping, what type of time frame, duration you're looking at, and so on. Me personally, I'm connecting the extremes of the trend line because I believe that there's a larger play at play. Matt, like Josh just said, if it starts to come to the trend line, it doesn't come anywhere near it, but it definitely made a definitive peak. That counts as a point for Matt. And that, factors into his methodology and how he trades a third point trend line, etc. So it really depends on how you identify with it. Is your trend line technically valid? Yes.
Yep.
I personally believe there's a larger play at play, which is why I said no. But
Gotcha.
the reason I said no is because if you are going to do it like that, I'd rather start it from where the move starts. Now, Josh, don't move your screen. Even though it starts up here, big money stepped in here and created this downward impulse. So I'd rather draw my trend line off of that type of line. I know that looks horrible, everybody. I apologize. But I would rather start my trend line from there and see if that lines up a little better. And you see how you get 1, 2, 3 coming on the fourth point right now. It's just a little bit cleaner because that's where the last largest transaction of cash was exchanged between buyers and sellers. And that started the trend. Even though there's a higher peak, you can trade off of it. But again, this all boils down to price action, time in front of the screen, understanding what type of move you're in, the duration of your trade. Because like Josh is showing you right now, these are all valid trend lines that he's drawing. And it depends again on what type of trader you are. I know for a fact Matt won't use fibs, the little green and red box, support, resistance, nothing. He just uses trend lines. And he will have a lot of.
But he's only getting 30 cents off a trend line. Comes up, he gets in. If it reacts 30 cents, he's out. He's not looking for follow through. He's not looking for big moves. He's looking for literally 25, 30 cent reaction off a trend line, and he's out.
Yep. And
That's
all
it.
of those trend lines will have that little hiccup reaction when it does get to those trend lines.
It will.
And that's why he's such a high frequency scalper. Gets to the trend
It's like
line
10,
in and
15,
out, makes
20
his money.
trades a day off trend lines. Yeah.
But not all of these trend lines have the same strength.
Exactly. Some are going to be graded differently. And that's why, like you said, it's like taking the extremes. I prefer to take the extremes and look at those trend lines. It gives me a lot fewer trend lines, and at least the ones that I'm looking at, I'm the most confident in because they're being ran off of the extremes, right? Because I mean, I could technically right now, if I wanted to, I could probably get 100 trend lines on this chart.
Oh, 100%.
Right.
And there was a
Draw
while
100
there,
trend lines.
I did that.
But
I
which
followed
one's
Matt's
the most
methodology.
valid?
No, and for a while I did that. I followed Matt's methodology. That's where my bars came from. I made all my candles green and I just started drawing trend lines. And I learned, the more trend lines I drew, as long as they were from valid points, they lined up with support and resistance or supply and demand or the 50% fib and so on. And I was like, oh, okay, so they are valid. It's just they all have different strength gradients. And it's really hard to do that as a new trader, gauge that. So whatever works for you and you see the respected the most and the most success with, stick with that. Because again, we all view them differently. As long as you're drawing them right and understand why you're drawing them, what type of trade you're in, you're going to do just fine.
100%.
Alrighty.
But also wrong.
I was about to say, I think that's why he sometimes doubts you because you say wrong, Kevin, wrong. Just to get heads up, news comes out in 1 minute, I guess.
Yep, news in 1 minute, data, and then again at 10. So, yep, I would add on to that last thing. It's like, I like trend lines. I use trend lines for sure. It usually comes last though. Key zones, support resistance, supply demand, number 1, retracements and extensions, number 2, any indicators that you use like a VWAP or an EMA, number 3. Then we can start, price action and price development. And then let's look at some trend lines and just see if a trend line happens to line up. And if so, great. But I tell you what, man, at one point, I used to just trade trend lines and I was profitable, but it was inconsistent, right? So it's just there was a lot of swings, ups and downs and this and that. And it got a little frustrating. Yeah, I was profitable, but I'm like, there's got to be a simpler way. And then I just start incorporating my trend lines as one of the last things that I really reference and I really look at. And if it just happens to be there and give me a confluence, great. If not, then, it's just low priority for me. But it's still important to know how to draw them and how to use them because there are strategies and trades that set up off trend lines. But it's, one of those things that usually comes last as far as when I'm trying to identify a confluence.
Yeah, so that trend line ended up on my chart last. I was doing supply and demand
Cool.
off of the 4-hour,
Cool.
and I just saw that downtrend and wanted to see how it was respected. So if I drew that trend line,
there's a trend line here on the daily. You can clearly see it, and it's definitely a reference point, in my opinion. Definitely a point that you should be mindful of, especially if it lines up with a few other zones and levels that you have. It only just really helps you validate that trade, even more.
Yeah, so the way I was looking at it is if I drew that trend line, weeks ago when there was only the 2 points, and then I watched that third touch come up, break it, and flush back down below it, what are most traders doing? Are you adjusting that trend line or are you leaving it on 0.1, 0.2? And
since they're so subjective, most of the time they get adjusted. Most of the time,
right,
we get adjusted. So right here, for example, there's just 2 types of traders. Type 1 will say, I count this as a 0.3, so that's still my trend line. I'm not going to move it. Some traders say, well, technically, I could bring it up here and still have another 0.3 coming. So it's tough. It's just personal preference, I think. It's just based on, screen time experience. What do you see happen the most? If you don't adjust your trend lines, do you see more validity? Or when you do adjust your trend lines, you see a little bit more validity and clarity. It really comes down to just personal preference. I do a little bit of both. Sometimes I leave it, sometimes I adjust it. It really depends on what I see in the moment.
Well, that's exactly why I wanted to leave it, right? Because it put me biased towards my zone. Because if I leave it down lower, it's more likely to line up in my supply zone.
So on the daily, that trend line for that third point, Josh, if you go back to the daily from this 4 hour,
it was never broken.
I saw it closed below that trend line, Kevin, and that would be your definitive. It's a liquidity sweep. They're trying to stop out traders, but because it closed below that trend line, I would still consider that trend line valid. Personally.
So you can see the daily trend line 100% valid. You never closed above it. But yeah, when you're looking at a 4 hour, you got some closures above it, strong rejection. This is why we do multiple time frame analysis. Go back to the daily. You're like, oh, well, technically on the daily, it's still valid. Yeah, we took some heat and kind of pushed above it a little bit on a lower time frame, but that daily trend line that first caught my attention is technically still valid. And so I wouldn't adjust it personally. Based on that, going back and forth between the time frames, I would just leave it where it's at. I would be confident that this would be the trend line that I would want to utilize. I think that's what it comes down to as well. It's which one are you the most confident in utilizing? This one or just leaving it like this? I would be confident to leave it like this based on what I see, and that's the one that I would utilize.
And honestly, if you have 3 or 4 other reasons and it lines up with the trend line in that area versus the other one, I would use the trend line that lines up with the multiple other reasons that you found.
For sure. Yeah, 100%.
Right.
And I like it because I even see a 4 hour fair value gap on GC.
Okay.
That doesn't have 3 reds. Oh, the first one I see it.
So this big one here, fair value gap, we filled it, rejected. Then we created one here, fair value gap. That's in line with 2 of those extensions, and it's kind of in line with that trend line as well. So maybe that's just something else that you can add to it, is we have that 4 hour fair value gap chilling right there.
Was this a lower high than this, or was that a higher low than that?
It was actually equal.
Dead equal, like
All
to the
right,
penny
so I
equal.
got
Honestly,
Yeah.
I mean, yeah, I'm seeing it to the penny. I mean, this red candle low here was to the penny up against those two lows back here. This green candle was technically a slightly higher low on this green candle compared to that red candle low. But
So
yeah, I
if
see
it's
right here, I see just flat across the board.
yeah, if it's flat from that
That's
extreme peak to the extreme peak, I've got nothing. But if it was slightly higher, I was going to say that's a fourth touch lower high. I'm sorry, higher low crack of an up or downtrend.
Yeah.
Fourth touch higher low crack of a downtrend, but it didn't put in that higher low from the previous point.
right, and that was that for that previous touch you're talking about. That would be a 0.3 after that. So, but either way, the other thing I wanted to throw out there, which I feel like I already know the answers here, because it brings patterns into play, and it's probably not in the right location. But the inverse head and shoulders forming would be, if you're flipping the other side, just looking,
Yeah, you're
playing both
starting
sides of the
from
trade.
basically the end of June, and you're seeing, the first little shoulder, the head, this potential second shoulder. I mean, assuming we don't break below that, what is that, 230, 23, 27, 80?
Yeah, that left
That's that
shoulder.
neckline.
Yeah.
I would assume that play would still be valid. Patterns is the last thing I ever want to throw into my analysis. I can make myself see anything I want to see, and I can justify it with my bias. It's usually the last form of confluence, and even still, like, I don't like trading patterns. They're so heavily manipulated.
Right. But what I'm asking, like, so that head and shoulders is, to me, it's in a location after a good flush. So it's I see it as a valid inverse head and shoulders. But on a bigger picture, it's just inside of some bigger zone to zone consolidation. So would you immediately ignore that because of that?
It's my understanding a head and shoulders or an inverse head and shoulders has to happen at key areas, meaning significant resistance or support or significant supply or demand. And right here, like you said, this is in the middle of two major areas between the all-time highs above and demand back at the monthly lows. So personally, I don't. Josh, correct me if I'm wrong, but I wouldn't consider this a valid potential head and shoulders just based on location alone.
On GC,
Yes,
what time frame?
the daily or 4 hour, I should say.
Head and shoulders and inverse head and shoulders.
Inverse head and shoulders on the
Inverse head
4
and
hour.
shoulders.
It's cleaner on the 4 hour.
Okay, because I was like daily, I don't see anything. I don't see anything on a 4 hour either.
He's starting basically from here.
So looking at this is like left shoulder, head, maybe right. Yeah, it's
No, not even that far.
Well,
Oh, you mean like
Right.
right here? So like
Yeah,
left
he's
shoulder,
just
Yeah,
head,
that smaller
right
picture.
Okay,
Yeah.
I gotcha. The fact that
kinda-
the fact that it is, in a sense, setting off some key support, I would validate it because I mean, I just throw a basic level up real quick, right? I mean, we can clearly see we've grinded the support level at like 2306 for quite some time. So we see this drop on down, we bounce, we come down and have a little bit of a double bottom. We see that, we push. If we start to see a higher low formation here, would that start to validate a potential left shoulder, head, right shoulder? Yes. Why? Because this is taking place off of a support level. The head came down to support, right? And then we popped. Now we're maybe seeing that higher low for that next leg up. So I would say, yeah, you're starting to see a potential little inverse head and shoulders formation here, 100%. But the biggest piece of criteria for that is the right shoulder needs to form slightly above or right at the same level as the left shoulder. So if we're looking at this as being our left shoulder, we need to mark up this little zone of support right here. Okay? So the right shoulder must form at or above the left shoulder's low. That's criteria, and that's a requirement. It can't be below. So we couldn't come down here and start to set up like this. Those are not the best high probability inverse head and shoulders formations, right? Those higher lows need to take place at the same level as the left shoulder, which it kind of did if you look at it. Left shoulder, head, right shoulder. I mean, you already pulled back, hit that level, and pushed. So I would already say like this was the start of the right shoulder in my opinion. So now that I see right shoulder, we pushed. If we come back down to that level again, I would just be mindful that it's already hit it. It's already pushed. It's coming down for the second time. I wouldn't just jump in at that level. I'd have to have quite a few more reasons, but hopefully that helps. But I would say this is a valid inverse head and shoulders, just kind of based on the location, what we did prior to seeing that right shoulder formation. It all took place off support, and it's meeting the criteria.
It helps, and I appreciate the breakdown.
Yeah, buddy. Well, thank you for taking my attention away from NVIDIA. I look down and I see I'm up a couple $100, which is nice on that short.
Mm.
I saw you looking at it. I'm like, you even jump in and
Yep.
you did.
Light size, small size, because like I said this morning, just because we come to that level doesn't mean I'm going to want to necessarily go all in unless I have those other confluences. But as we're grinding up into that level and we have some decent price action to start, said let me go 10 contracts, 50 cents of risk. Worst case scenario, I lose, I don't know, $100. So I reduced my size. I took it, and I'll see if we follow through a little bit.
And on that question, Kevin, that was a good question. I mean, even though you said maybe you may know the answer, but even then, I mean, many of us are still new right here as traders, and even that question could help many of us that are still trying to learn, especially when you're able to see patterns or what is that, the head inverse head and shoulder. Hey, some of us can't even see stuff like that, especially the ones that we're barely learning. So that was a good breakdown and a good question, by the way.
Yeah, buddy.
Thanks, man. Yeah, I thought I was gonna get heckled a little for it because the location is, location, and because it's in consolidation, I thought maybe it was a little invalid, but it is on that support, which makes a big difference.
As long as that criteria is met, it's going to be a valid setup. If it was in the middle of support resistance at just a really random location, even if we saw a textbook head and shoulders or inverse head and shoulders, it could be textbook, it could be meeting some of the criteria. But if it doesn't meet that first piece of criteria, location, not saying they can't play out, it just carries lower probabilities. That's all. And so how do we re-increase our probabilities? More confluences. So like if I saw, for example, a head and shoulders take place off this key zone, would I literally just take the short off the right shoulder off that key zone? Yes, I would, right? All by itself, because it's meeting the criteria of right shoulder at the left shoulder at a key zone of resistance. I don't need other confluences to feel confident to take that trade, right? But if that were to be setting up at a random location, right, could I still take that trade? Yeah, but I would just need a few extra confluences to help me validate the trade. Maybe a fib extension, and that's a 50% retracement. Okay, cool. It's also lining up with the left shoulder. Cool. Maybe hedge pressure's right there. Maybe the VWAP's there. I don't know. But as long as I got like 2-3 reasons to take that trade, even if it's not at a key zone, I can still re-increase those probabilities, right? So that's the biggest difference. If you just want to take the head and shoulders off the right shoulder, right, it needs to be setting up off of a key zone, right, to be able to just get in on that right shoulder off that key zone. But if it's at a random location, not at a key zone, just identify your confluences, have your multiple reasons to take it to re-increase your probabilities. You can still take those trades if you have your reasons to do so.
Oh, but that's my bad, Kevin. I'm not a pattern trader. I'm familiar with the rules and so on, but it seems like you have a better understanding of patterns than I do.
That's like one of the only few, like I call them retail formations that I'll even look at, consider, and trade, but I trade them differently. Right? Because like traders are taught to do this. They see a left shoulder, they see a head, they see a right shoulder. What retail traders are taught to do is wait for it to crack the neckline, right? Because there would be this, what they call a neckline. Get short at a crack of the neckline and put stops over that prior high. That's like the textbook way to trade a head and shoulders formation. Can't tell you how many times I've taken that trade where it's cracked, I get my entry, and then it freaking just shoots straight up and stops me out. The most annoying thing ever. So I'm like, there's got to be a better way to trade this. What's the better way to trade it? Let's get short off the right shoulder into the neckline as my first PT. If it cracks and follows through, great. If it drops and then just rips on up, guess what? My stop is then at break even. I've already secured some profit. I can make money on the trade. So I've just tweaked the approach to trading that formation based on what I was taught as a retail trader, years and years and years ago. So
I took that same methodology for the fourth touch, higher or lower crack of the uptrend or downtrend corresponding. I'll get in on that same curl over because by the time it gets to the trend line, it's manipulated too heavily.
And so that's, one of the only retail formations I trade, head and shoulders, inverse head and shoulders, but I trade it differently than what, most traders are taught, right? I don't trade the neckline. I trade off the shoulder, right? And I'm confident to do so. Price action, price development, as long as the right shoulder's off the left shoulder. Like, I'm taking that trade into the neckline as a first target. And if we follow through, great. If not, at least I'm still getting something out of it, right? And the same thing with like a bull flag. I don't trade bull flags the way that traders trade bull flags. I trade the manipulation of a bull flag, right? So like if we have that big spike on up and then we have that bull flag formation, right? And we start to break, that's where most retail traders are taught to trade this, is a break out of that consolidation for the bull flag, expecting more upside. But how many times have you seen a bull flag start to break, it pushes, and then it just dumps hard like that? I see that all the time, right? Where traders buy the flag break, it starts to push, and then it just rejects hard. What I do is I wait for the break of the bull flag. If it breaks and keeps going, I don't touch it. But if it breaks the flag high and then starts to come back down below that flag high with force, I start to short this, expecting that big rejection, that big drop. So I don't trade the break of a bull flag. I wait for the flag to break. If I start to get indication that it's a false break and we have that potential rug pull incoming, I look to start shorting it when we start getting back below that flag high. That's how I trade a bull flag, right? Not the way that they teach it. I trade the manipulation of a bull flag, not the actual flag itself.
I think we have SPY coming into a level zone of resistance, but I wasn't sure if you mentioned the hedge pressures yet.
We haven't gotten them yet. It says
we just had 10 a.m. news drop as well. That
it literally says 266 is hedge pressure, and that's not correct. So I'm not getting any hedges today. On the SPY, QQQ. I'm not getting anything on the SPY and the Qs for today.
Went on without me.
You must really love you guys. I'll set my trade aside, give you guys some examples, and then I look down, I'm like, oh shoot, I'm down now. When I was just up, I'm down. I love when that happens. Well,
It's getting very close to all-time highs.
What is?
SPY, about $1 off.
Yeah, Qs are about $1.40 off. The SPY, we're getting there, dude.
You know why we're getting there?
That's for new all-time highs today, man.
I'm off again today.
And that's why we're gonna go all-time highs. All right, load the boat to the long side.
Remember I told you that
when you're here, it's like when you're here.
Every time I take off, I can't trade because it's all-time high.
Yeah.
There is this thing called momentum trading, but I do not recommend it for new traders.
Well, it depends on how you classify momentum trading. So like I classify momentum trading like a break and retest. That's like a momentum-based trade, right? It's not a reversal. A reversal would be like a head and shoulders off resistance, but like
trading the break,
and
no
retest would be a momentum-based trade. But just buying the
like
break over a prior high, thinking there's momentum, that's a different story. Like if you're just literally buying over a prior break of a high to trade that momentum, that's no, I don't recommend that. But if you see there's momentum and you want to get in on those higher lows, expecting the next leg up, then do that on long breaks and retests for sure. But yeah, there's a couple different ways to look at momentum for sure. Like some traders will just literally buy this, expecting there to be momentum to the upside. Wrong. You're not doing that. But if you wait for the break, you wait for the retest, you can trade with that momentum. You're not getting in as it's spiking on up. You're waiting for the pullback to capitalize on that next leg up.
And the second option is much safer. It's much less risk. It's just less stress. Trading that initial breakout, while it will work out sometimes, it is not a consistently recreatable strategy that you
Right.
can do with
Like
confidence.
just trading that break of resistance, that is the 1 out of 100 that are going to play out. Because how many times do you see a stock come up, break resistance, and it goes, ugh.
And not to mention that was a news-based reaction. So something else, we don't momentum trade through news. I know you guys see those little TikToks of everybody getting together. All right, 3, 2, 1, buy.
Oh.
Everybody loses money. Like, don't trade the news. There's much safer ways to play with your money. If you want to gamble, go to a casino.
It's a better time. They give you free drinks. You know, they'll come over and like massage your back. It's a great time. It's a great experience. I'd rather do that and lose money than do it in the market. Yeah, and the reason I like, you know, the whole break and retest is it allows you to really get a sense of the overall trade. Like on breaks and retests, you want to see the breakout to be strong. So, hey, I just waited for the SPY to break that zone. Was that a strong break? I mean, look at it. That was a pretty strong break. Cool. So if we pull back and retest that level of support, right, I expect to see more upside, and I could expect to maybe see something similar. Right? Strong break, healthy pullback, next impulsive leg on up, right? And it allows me to gauge the strength of the breakout. It allows me to sit back and be patient and build a plan for the retest, not just chasing this thing to the upside.
Just about there. See, old me would just short all-time highs because it's all-time highs. But in this market, and new me knows better. Because we see all-time highs every other day for like a week straight, and then goes sideways for a week.
I have one question.
Man.
What's up?
What's up?
I know today in the morning you were mentioning about you jumped out of shop, and I jumped out of shop yesterday as well.
Yeah, so did I. I closed.
But you said you would have still counted as valid if it wasn't if it didn't open below yesterday's close, correct?
As long as we didn't fall below it intraday. So we opened above that level, the trade's still valid as long as we don't close and fall below 66.38, which is yesterday's close. We came down into it, we grinded it, we pushed. That trade overall was still valid. If it would have cracked below it like that and then retested it as resistance, that would have been invalid. If you were in that trade, it should have been closed for profit. We came down and held yesterday's close as support. We're pushing on up. I mean, right now, as long as we hold above low a day at 66.38 level, you do have room to 68. This trade is still, you know, valid. The trade is still intact.
Okay. And I guess that's how you'll take every swing trade as well, correct?
100%. Yeah. So if I'm on a swing trade, right, I come back the next morning and I look at the daily, I assess my levels, and then I try to get an idea of at what point does the swing trade really start to become invalid.
Okay.
Right? So I can rail my stop accordingly, right? Or I can take profit accordingly. Yep. So every day I'm going to do analysis, and if something stands out to me, I'm going to readjust my plan and manage it accordingly based on what I see for today's session. And that's what we do with shop.
Yeah, I wanted to keep an eye still on RMD because I didn't know that process yet. But right now that I heard you explain it, I said, okay, let me look at RMD and let's see if I'm still in
for
this
today's
trade or
session.
Close it.
You know, the way I look at RMD is if I was swing trading this from the 184s, and here it is at a key resistance level, the bottom end of this daily gap. I mean, number one, I'm taking profit for sure. It's a target. I'm taking profit. Then I'm saying, okay, what do I not want to see? Well, I really don't want to see this thing make a new low a day, and I really don't want to see this thing come back down below yesterday's close, 191.56. And if we did hit a new low a day, and we did close below, or I'm sorry, and then we did drop below yesterday's close, right? The candle would be flipping red on the day after hitting a key level of resistance. Could we follow through to the downside? Probably. So where's my line in the sand? Where do I not want to see RMD go below 191.56? And if it does, right, and we stay below that level, that's where I'm going to cut my entire position for profit, because I would have to expect it would probably come back down to my cost basis anyway, if that were to be the case. So if that's the case, then I'm just going to go ahead and take my profit at 190, 150, for example. But at least it gives you a line in the sand. It's like, what area do you not want to see the stock's price go below? For me, it would be that 190, 156. As long as we don't come below that level and hold below this resistance, the trade technically is still intact. And there's a reason to continue to hold this and manage this and see if you can get a little bit more upside. Next target, $200.
Yeah, I'm looking at my TradingView account, and I actually have my line at that actually high of yesterday's 192.74. I said, if it comes down, I'm just gonna sell and take whatever profit I had.
And that's it. Yeah, it's just like the initial analysis you did to identify the setup. You're going to continue to do that type of analysis to continue to manage your trade to the best of your ability. You're never going to manage it correctly 100% of the time. Sometimes you see a reason to get out, and then immediately it like, oh shit, I should have never got out, and then it rips, and you're like, okay, well, again, you're not going to manage a trade perfectly 100% of the time, but if you're focused on managing the trade properly, not your P&L, overall, you will start to extract more money from your winning trades. You'll be able to capitalize on those a lot more. Never perfect, never spot on 100% of the time, but overall, big picture, at least you're doing a lot better and you're going to capitalize on more of your winners.
Oh yeah, no. Plus the 20 EMA is right there at 196.05. So I know my target was going to be take it all the way to 198, but every day changes. I mean,
every day something new presents itself, and every day there may need to be a different way to manage your trade, right? Like, how many times do I build a plan? I'm like, yep, we got 5-to-1 risk reward, and I'm super confident, convicted I take the trade, but I close it at 3-to-1. That happens a lot because I saw a reason to get out at that 3-to-1 and not hold it longer to come down to that 5-to-1. And most of the time, that's a good exit, because most of the time when I'm getting out, because I see a reason to get out, it goes back up to my cost basis and higher, to where I would have given all those profits back. So I'm able to set my initial expectations with the plan, 5-to-1. Sometimes I may get my 5-to-1, and it does exactly what I thought. Sometimes I see something 10 minutes later that suggests it ain't getting to 5-to-1. I'm going to take my 3-to-1 right here based on what I see. And it's just through that screen time, through the experience, and through just trade management, you're actually able to manage your trades better and capitalize on more of your winnings.
So let's say it was pre-market right now, and it was below, once again, the candle, yesterday's candle, but the close.
Yep.
As soon as market opens, boom, automatically sell. I mean, there's no reason to even want to keep it because it opened below that price.
Yeah, because I know if we open below yesterday's close and we push up into it and we can't get through it, we could roll on over and drop. That's a barrier of resistance. So yeah, if we saw it open below and it did tick up and try and get through it and it couldn't, and we started the roll, yeah, I'd be closing that trade for profit, 100%.
So you would have still waited to see what it did once it opened.
The best of my ability to wait as long as possible. If we would have opened and then just started to drop, and I'm like, I don't really see it bouncing, I'm getting out. But if it opens, I'm going to see if it can try and get up there, because it could break it, could hold it and still rip, and that trade be intact. So I want to be as patient as possible with it, but really just watching it, the first 5 minutes every minute to get a sense of, do I even think it's realistic to see this thing make its way back up? If I see a lot of strong selling pressure and I'm like, yeah, it's just not going to happen, I don't see it, then I'll close the trade at that point in time.
Okay. Which at that moment, I mean, you should have had already profit anyways.
At that point in time, you should have already been scaling out at those targets. 100%. You should be trailing your stop to a threshold where you want to get out for your remaining profit and be okay with that. 100%.
Okay. Thanks for the explanation.
Yes, sir.
So pre-market technically hit a higher all-time high than post-market or open market. So if you put it on a 4-hour chart, there's this one little spike, and it kind of created a supply zone on that next candle that we're currently in. However, I know there's no supply at all-time highs, so I'm very hesitant here. I'm about to screenshot this. I wanted to get it in the right frame.
You SPY or Qs?
SPY.
I don't see any pre-market all-time high.
What?
Could be a misprint on your side.
It doesn't look like a misprint.
Oh, you're going back. I got you. You're going back a little bit. Yeah, you're going back.
Yeah,
I
there it
gotcha.
is.
I gotcha. All right,
Yeah,
my
my
bad,
heart
homie.
dropped.
I
I'm
thought you
like,
meant this
man, I gotta
morning. I'm like,
crack
what are
this
you
bar.
talking about?
Start seeing things again. User error. Watching, telling myself, don't short just because it's all-time highs. Don't short just because it's all-time highs. It's all I'm repeating in my head. Because in a bull market that has burned me more times than I can count. And, it's only a little paper cut. I do it with risk, management type little stops, but try not to take
Yeah,
those
you're over
paper
here
cuts.
saying don't short at all-time high. Don't short. I see the break into an all-time high, looking for a possible all-time high sweep, get back below that initial level of 550.13 and look for a pullback to like 549.44 before truly getting that true break. It's not all the time that the first time we come up to a key resistance level, aka all-time highs, that the first break is actually the true break. Most of the time we come up, we try and break it, we get that rejection, we pull back, then we start to really see that true break that carries some follow through.
So what I was waiting for was this 5-minute fair value gap that we created from that news push, basically from 10 o'clock, 10:05, and 10:15, and then taking that 10:05 candle's body. I was waiting for a pullback into that area before considering going long again. And the shorts, if I were to take it, typically would have pulled back to about that area, giving me, just about $1. Not $1, that's 20 cents of room, and then it would have stopped me out for a small paper cut and burst. So I'm actually, even though I see it rolling over just like you are, I'm tired of getting burned in these bull markets trying to short the all-time high. So I'm just waiting for the pullback so I can ride with the momentum and potentially catch another long here.
I can dig it.
Because death by 1,000 paper cuts is not fun, even though they're paper cuts.
It's not, no. And then mismanaging a trade and flopping it from a nice little quick profit, stop should have been break even, to sitting here and be like, well, that's a bust.
I took one sim trade today. It was like 5 minutes before news. I was trying to catch that little rollover at 9:55. I was unaware of the news at 10 against sim trading because I didn't have confidence. It was, just a potential trade that I'm trying to get feeling out. But that's the only trade that I've taken so far today. Otherwise, I'm sitting flat. I kind of want to be in this short right now. Listen to what I just told myself.
I just want to see it back to that 1 minute hiccup candle and then that previous daily high at 549.44. That's a support level. That's where I'm going to close it. And looking for this trade to basically wipe the the mismanagement of the NVIDIA trade.
Don't get me wrong. I hope it prints and like dumps down to a low today.
Oh, that'd be really cool, wouldn't it? I doubt it.
I will be a little salty.
I mean, I doubt it, but that'd be nice.
Derek with a little $500 on the video. Dantino with 780 on the SPY calls. Love it. Yep, it's into that fair value gap now. Don't fill it and just keep on dumping. You're going to print, and I'm going to be salty.
And I'm scaling. Closed half my position.
It's just going to roll. I don't have confidence.
I'm pulling a stir. I will admit it, based on what you said the other day.
What?
I literally just closed that trade to get back to break even without actually just managing the trade. I managed my P&L just to get back to break even from the NVIDIA loss when the trade's still intact. If I was just managing the trade, I'd probably get another $200, $300, $400 out of it.
I'm sitting on my hands.
And I recognized it when I was doing it, but I was like, you know what? I do want to make up for the stupid mismanagement of NVIDIA, and so I'm just going to take it.
And just on that note, everyone, it's such a dangerous mentality. Like even for a veteran like Josh and the rest of it, like it happens, but to recognize it in the moment is key. I mean, he saw it in the moment. There was no reason to exit
it's
trade.
just the awareness of it, right?
Yep.
That's it. Being aware of the thoughts.
His focus shifted from I'm taking a good trade and managing a good trade to where's my P&L? How much do I have to make to get back to break even? And stuff. It takes your focus away from actually managing your trade when you start focusing on the money. When in reality, if you just focus on the trade, the money's going to be there.
This is something that I don't struggle with. This is never an issue, but today it definitely came to the surface a little bit. So
it happens to the best of us. Just being able to recognize it in the moment, not carrying it forward, making the necessary adjustments, whether you step away for 5 minutes, whatever it is when you experience these situations. Just it's managing the emotions is what keeps us successful.
And the last thing I want to hit on with that, it's like, you know, yeah, we talk about, hey, be disciplined, don't give into your emotions, be patient. It's like, yeah, these are all really important things, but we don't have to put all of our focus on, okay, discipline, patience, emotion regulation. The one thing we just put our focus on is being mindfully aware, just being aware of our thoughts, just being conscious, present in the moment and aware. That's all you got to really focus on. If you're conscious, if you're aware of your thoughts, you'll be able to recognize when you're not being patient to be more patient. You'll be able to recognize when you may make an emotional decision and say, oh, that's not a good idea, and control your emotions. Okay? If you feel like you're going to chase a stock and lack discipline, you're conscious, you're aware of your thoughts, be like, that's not really a good idea. Let's not do that. So to become more disciplined, to be more patient, to regulate your emotions, those most important things about trading, it just comes down to being consciously aware of your thoughts. And when you're conscious and you're aware of your thoughts, you get to choose which thoughts you take action upon. Oh man, this stock's breaking out. I really want to get in. Most traders are running on autopilot and they just get in. Now it's, man, this stock's ripping. I want to get in. Hold on. That's not really a good idea, is it, Josh? No, not really. I mean, I've done that a lot in the past and I've gotten burnt. Let's not do that. And so in turn, making that good decision, guess what? I'm enforcing discipline. So maybe that helps you guys too, as far as like really what the goal here is. It's just being conscious. It's being aware of our thoughts and being present, right? To where we can make better decisions, to be more disciplined, to regulate our emotions, not give in to the emotions, to be able to recognize when we're hunting for a trade and say, you know what? It pays to be patient. That's really the biggest thing here. And so how do you become conscious? How to become aware and in the present moment? Through daily practices like meditation. Right? The act of, daily meditation, for example, for 10 minutes, the whole point of meditation is to control and calm your mind, right? You're conscious, you're aware of all the thoughts, and your job is to try to quiet the mind. Okay. And you do that on a daily basis. You start to gain control of the mind and gain control of the thoughts because you're so aware in that meditative state that just naturally bleeds into how you're thinking, how you're feeling, and all of these other things throughout the day. So literally just 10 minutes of morning meditation over the duration of 30 days, that one thing alone will allow you to be more conscious and more aware of those thoughts. And then, hey, guess what? You get to choose which thoughts you take action upon, if any. So that's how you get to the point of conscious awareness.
Where's that trade at?
I believe the trade's coming up on SPY, assuming we put in a lower high on this little 38.2 retracement. So basically, I drew a retracement from 955 to the high of the day. I posted the little chart in a market chatter, but the golden pocket I highlighted with the little gray circle. I'm waiting for it to come back into that area for the potential long. But if we just put in a new high here, obviously that trade's dead. But I was trying to see where it could possibly retrace to before the extension to the upside.
I like the golden pocket, and the reason I like the golden pocket is it's in line with that data spike before the drop. So if you just kind of mark up those two highs right after data was released prior to the drop, it just so happens to line up with your golden pocket. And since we had data this morning, and since we saw an increase in volume, this is all valid data points that I would be referencing today, simply because we had, more volume than average. We had a catalyst. We saw some movement. That's why I would say, you know what? This is a key point to reference, right? That previous pre-market high, right? Where we had volume, which created that high because of a key economic catalyst. And that just so happens to line up with your golden pocket. So
and
maybe that gives you something else.
If this puts in a higher high, that trades the short side's dead. I'm going to draw fib extensions from low a day to next swing and then back up again to see where we can continue going to the upside.
Start mapping out some overhead resistance. Yep.
I'm not as confident trading off of those levels, especially to the long side, but areas to watch for potential short scalps, because I know we're at all-time highs. I know trend's your friend and we're supposed to trade with the trend, but as we put in new all-time highs, we typically have those big sell-off spikes that I personally like to capitalize on. I know they're not long-lived moves to the downside, but they pay quick, they move quick, they happen within minutes. So as long as you have good enough discipline, you can catch those. But otherwise, I have to wait for some real significant pullback, like to that golden pocket, that pre-market data spike, or something to continue chasing this to the long side. Even though it's pulling up, looking like it wants to create a new all-time high right now, it's what, 10, 15 cents away from that, 20 cents away from that. I have to sit back and really be patient and not chase because I've been burned too many times trying to catch these larger plays to the upside at all-time highs. Profits chat's just dinging away today. Tim's the coin master. It's official. Come on down, spot. So Logan, I saw you posted that yesterday. I hope you can hear me, and this goes for everybody else too. For using institutional supply and demand, while yes, you can apply that to the smaller time frames, you are still have to be aware that you are plotting retail traders' orders. And let's be honest, as retail traders, how many times have you left an unfilled order when the move moves in a drastic way away from that area?
Quite a bit.
What?
Quite a bit.
You leave the order?
No, I'm just joking.
Okay, I was gonna say, so most retail traders, they cancel the order and
Right.
they go look for another option, or they chase it, or they move it, or something. So despite there being a big move there, despite there being an impulse there, and it's very unlikely that there's going to be a block of orders that are unfilled left there when you're doing a 5-minute and a 15-minute supply and demand calculation. I'm not saying it's not going to work. I'm not saying it's going to work every time or not going to work. I see you have consistency with it. I'm not trying to change anything that you're doing, Logan. It's
That's what I was
just
gonna say. Don't
need
change
you to-
anything, Logan, because it's clearly working.
yeah, I want you to be aware that it's not an institutional order block that's potentially left there. It's still basically trading off of support resistance when done like that. Overnight session, most certainly. There's larger whales and so on, and it could be a smaller hedge fund or a larger whale. In the daytime, it's just during the day, those 1 minute, 5-minute, 15-minute supply and demand zones that are created are typically not left with an order block left unfilled once it moves away from that price. I'm not saying it can't set back up or they don't step back in, but retail traders tend to cancel those orders more often than not. Whereas big banks, larger institutions, they will leave that order block there for days, weeks, months, however long it takes until price comes back into that area. But again, you are absolutely on fire. I'm not trying to change anything you're doing or instill any, lack of confidence in your strategy. Just watching the spy. Basically came down and did a liquidity sweep of that fair value gap that I marked out and then continued to the upside. I'm glad I didn't take that trade because the liquidity sweep it did would have been enough to stop me out of that trade back to the long side, despite it working out now.
That chair hurts my butt, man.
You gotta get the good chair. There's a chair that I saw on Shark Tank where like the bottom and the back move individually, so it creates the sensation that you're standing but while you're sitting.
Oh, that's cool.
Yeah.
Yeah, this is not.
Type in Shark Tank office chair. Should pop up.
Hurt your butt.
Hey, again, you are absolutely on fire. I'm not trying to change a damn thing you are doing. You have been absolutely printing with consistency. Your TA is on point.
Oh yeah.
Yeah, I'm not trying to change anything at all that you're doing. Just wanted to make reference for other traders
your
who are
mind a
also
little
using
bit,
that
yeah.
same methodology that it's not an order block that's there. But again, it works and it works for you. You've got it dialed in. Not trying to change anything you're saying. Doing. I should probably just stop talking. Secret Lab chair, man. It's probably the worst thing I ever bought.
The secret. Oh, dude, terrible investment. $500 chair. One of the most uncomfortable chairs ever.
Yep.
Good morning.
Tom, what's up, man? Good morning.
Hey, quick question on a scanner. Are there any scanners out there for identifying gaps, the potential gap fill bounce, anything along those lines? Because I've been tracking a lot of things we've talked about with some of these gaps, and a lot of them have been playing out.
It's a really, really effective strategy. So I'm sure there's indicators that people have created. like scripts and indicators where like the whole fair value gap, I have an indicator for fair value gaps. I'm sure there's one for like daily gaps, but is it based on our parameters that we've built that makes the gaps so effective? I don't know. So actually, this is something that I've been working on last couple of weeks. Is I'm actually working with a development team that develops custom indicators for TradingView, and I want to create 2 indicators based on what I do and my parameters, and then start giving that to you guys for like zones. So starting to build out the parameters for identifying like high probability zones to trade off of based on how I do it, and same thing for gaps as well.
Because I look at some of the things, obviously not as many as you have, a couple of things I've identified, but the things you've identified as well is the percentages that have played out are really high.
Very 70, 80% plus.
I would say plus, because I look at some of because I was going through it this morning, look at some of the different ones saying, okay, kind of back testing
like that
some
played
of the things
out.
that
That
kind of
played out. Yeah, it's very, very accurate system.
Oh, absolutely. Because I'm looking at this, I'm like, oh man, I missed that. I've hit a lot, so I'm not complaining, but I sat there, wow, that really did play out. It took a little bit, but it played out. Like I look at the Cisco one. I had that on my sheet. I got caught up in some other things, and I'm like, man, that played out.
I love gaps, man. I tell you what, if there was only one way of trading for the rest of time, it would be off gaps.
Yeah, I mean, look at that chart right there. That's ridiculous.
Yeah, I mean, and it had more confluences too. 38 to retracement into the 20 EMA, also gap fill bounce with some really nice follow through within a 24-hour window. Yeah, those contracts are up like 200% right now.
So the reason I like gaps, and to add on to this, I mean, somebody stepped in with such force on this little order block that it gapped up. There's unfilled orders there every time you see a gap on both sides. So once it comes back into that gap, it hits the rest of those unfilled orders, and the very next thing it does is it impulse rallies out to the upside again.
Boom.
Well, and going back to a conversation you guys were having about 8 minutes ago, is you look at institutional buying and selling. You look at those wild moves one way or the other, it cannot be retail. There's just not enough volume from the retail side to generate that. So, and what you're saying, Stir, is there are trades that will get left behind on the institutional side because they don't care about a day-to-day move. They're more concerned about the bigger picture, because the volume that they do and the amount of money they have in their coffers, they can sit and wait on that trade to come back around. If it's 6 months, 12 months, 18 months, whatever it is.
Orders are there. They are pending. They're not being removed. Like he said, like retail traders, 100%. Makes logical sense. But back to the indicator topic, is scanners. I don't know of any scanners or screeners that necessarily do that. But now like an indicator that could actually put that on our chart for us. Yes. And maybe an indicator that scans the entire market to find gaps and then presents you with a list of stocks where there are identifiable gaps. Then you as the trader would have to go through and see, is that a gap worth trading? So it really just comes down to how can that be scripted and coded and those parameters set to where it doesn't just show you, gaps on like really random low liquidity stocks. So it's just like, we would just have to build it with those parameters, make sure there's only a select grouping of stocks we would look for. The gap would have to be bigger than say like 50 cents on a daily. And then from there, it would scan the market based on those parameters and then display you with a list of stocks. And then from there, it could even be an indicator that actually would put those gaps on your chart for you.
Right.
So there's a way to do it, and I think it's great. It's going to be alpha gaps and alpha zones. I've already been thinking about this. Like, is there a way for us to build an indicator that you can literally just put on your daily chart and it finds you all of the most significant high probability zones that we identify manually, but is there an automated way to do it? 100%. Like I can definitely set the parameters in an indicator to do that for me because I know what my parameters are. So yeah, that's something I want to work towards because I think that'd be nice to just have.
I don't know if we're going to get this going.
That costs money. And I tell you what, freaking indicator developers, they're not cheap, man.
Oh, I wouldn't think so.
They're not cheap. Everything these days costs a lot of money. But if anybody wants to partner behind it, let me know. We'll figure out some kind of little partnership with it.
Did you mess around and look up gap indicators yet?
Have I? No, I haven't.
I'm pretty sure
I already know it
Algo
wouldn't be based on my
something.
parameters, so I would already hate it.
That's pretty negative.
It is pretty negative.
Ha-
I'm just the GOAT, Kevin. So if it's not by me, I don't like it. Okay.
Totally get it.
No, I'm kidding, dude. I'm kidding. No, I haven't played around to see if there's anything like that. I'm sure there are. I'm sure there's, zone indicators that find zones of support resistance. I mean, shoot, you can do institutional supply demand indicators. They have those to help you identify supply and demand with an indicator. So I'm sure they exist. I just don't know.
Well,
how
that
good they
same
are.
Lux algo with Smart Money Concepts does fair value gaps. So
They
I
do fair value gaps, yeah.
Doesn't do it great. It's got a lot of false
What?
positives.
How do you mess up a fair value gap? They show you the fair value gap. You can't mess that up.
You can't. No, I mean some are
The-
invalid. I notice a lot of the fair value
zones
gaps
are
they show me
different.
are invalid, but
The zones are different. The zones don't line up with mine. Well, they line up a little bit, but they don't do it off of the same part of the candle.
We just retested previous all-time highs as resistance. If we can stay below this, I would take the short back into that golden pocket.
do it.
I'm waiting for the short I'm waiting for that golden pocket so I can go long. I don't want to be caught up in a short.
All
Personally,
right, first PT on Cisco. Oh wow, those went 200%.
told myself I'm not going against the trend today.
When you call out your all-time high, are you doing it without post and pre-market?
We're looking at daily.
I'm currently referencing post market and daily chart for all-time highs, but I have the pre-market all-time high off to the side just for reference. It's the top end of this little gray box that I drew, basically. From that
Because when you
previous
go into the daily chart, there is no post-market high. Then I
Exactly.
try
Exactly.
to- Okay. And then in my 4-hour chart, I see the all-time high is obviously a little higher.
Daily trumps pre-market. So yeah, that pre-market all-time high that you see, is it a point to be mindful of? Of course, but is it the true all-time high that printed on a daily? It's not.
And also look at the
Okay.
price action running up in post market has made that all-time high. That's not institutional order flow. That's retail traders just buy high, sell higher, going all the way up. And the very next day, what
All
it do?
the way
It
up.
plummeted the entire day.
Let's
All-time
go.
Time lows only matter during regular trading hours.
All-time highs only matter during regular trading hours.
Unless you got
Exactly.
something
Daily.
like Tesla just running like it did, but it's the anomaly. It's the exception to the rule.
I'm surprised Tesla actually broke the 198. I missed the trade on. I didn't miss it, never set up, but that was the short-term swing on Tesla. That thing went pretty nice this week.
They are trying to push this thing up so hard. It's just choppy sideways. This is one of those days I don't like. And again, it's the end of the month. Capital preservation. Make good choices. If I don't take a trade today, that's a fine way to end the month. I had a great week.
I'm happy with my $50. I'm break even. I'm happy.
I had a great day yesterday. It doubled my daily goal. So no real reason to trade today
Nice.
unless I see an awesome opportunity. But
I want to see if Cisco can just break that 47.85 and just keep going. If not, then I'm going to start scaling here. That's
CSCO.
first target. CSCO. Yeah. I took the swing trade. What was it? Not yesterday, but the day before. No, it was yesterday. I took it yesterday. I was going to hold it as a swing. We closed strong, and we pushed nice today. I got in at yesterday's low day, pretty much. Was the entry here. Right. Yep. It was like right there at like 46.83 is the entry.
Just doing my little TA off to the side here.
Looks good. I mean, from short-term contracts, they're up 200%. I'm definitely inclined to take profit. That was my first PT here. It's crazy to see a contract go 200% and the stock only moved $1. I'm gonna start my scale out.
Where did that bounce?
What contracts are you in?
July 5th, 47.5. Cheaps.
Okay.
Short term, cheap. I was expecting this to be just like a multi-day swing.
So this is what I'm
and then
talking
if it was
about.
still looking good to the upside, I was just going to roll those to a further expiration on the runner.
What's your strike?
47.5.
This is a perfect example of institutional order flow. A little bit of a balance just ahead right there. But the ticker CSCO, right?
Yeah, Cisco.
Cisco.
Yep.
So there is a candle way back on 11/16 from 2022. And I'm trying to post this chart so you guys can see and kind of follow along.
That's right here. I'm
But
looking
you'll
at
have
it.
to notice where we bounced from is that demand level from way back there almost 2 years ago. So these order blocks are left when the institution set them, and they're just left there until they get filled because they, again, like Tom said, are in it for the long term. So waiting for those order blocks to get retested is basically how I trade. And I look for these imbalances on the smaller time frames as well, because the imbalances is an area buyers completely outweighed sellers or vice versa. There was some type of battle between sellers and buyers, and one of them won. Well, the one that won, if it created a big enough of an impulse move away, there's left orders to be filled in that area. But it took, 2 years for Cisco to come back to that level. As soon as it did, it bounced up immediately because that's the last time institutional order flow stepped in. And had it been filled, they stepped in before that, but as it comes down, it fills those levels. And we're going to re-record that trading with the banks lesson to make it a little bit simpler, a little bit more streamlined as well in the next week or so. And I'm going to get that re-up because I'm able to explain this a little bit more simply, how to dial in those areas. I'll pass that along.
Yeah, thank you for that, Stir, because I know when you first did those lessons, still didn't understand anything at that moment, but now that I'm understanding a lot more, I think it'll sink in even better now.
So in fairness, that would, go hand in hand with you being a brand new trader. Like a lot of the terminology used in that lesson is advanced. A lot of the strategies, the understanding, so on, like you need a little bit more experience to understand what's even going on. So don't feel discouraged. You've come a hell of a long way since then.
And that's the thing is like, you're going to watch material that's foreign, okay, to learn it. Things aren't going to make sense. You're going to have questions. So you write your questions down on the things that don't make sense. When we have the Zoom sessions, you have an opportunity to ask those questions and get the help you need to bridge the gap. So it does make sense. So anytime you got a question about something, just ask it. And we have like real-time examples that we can use to educate you guys upon to help you guys truly understand what you've been learning through the course material. There's your golden pocket. Give me the golden pocket. Still
One
don't have
more
hedge pressures today.
potential.
What a bust.
A little bit lower in this area.
What a bust.
Filming.
Yeah, just don't give me hedge pressures today. Yeah, end of the week, end of the month, end of the quarter. Yeah, just screw you. No hedgies.
Come on, fill the other one. It's not gonna fill the other one, whatever. So I just got one contract in at that golden pocket. I filled my stops down to basically the low of that little spike, right below the 61.8, I should say. Targets back at high a day and beyond. But if it comes
Has
back
anybody
below that
requested a
69,
payout lately from Top Step where it's taken a lot longer than it normally does?
not within the last week or two.
Oh, okay.
I did see they had a error or something come
Oh,
out
did they?
before.
Okay, that's it. Because I was like, I requested a payout early last week, and I still haven't gotten it. I'm like, where's my money, guys? It's taking a lot longer than it normally does.
Do you have your bank account linked? Because mine goes through as a wire transfer. It's typically within a few hours.
So I just do the ACH. I know it takes a little bit longer.
Yeah.
Doing ACH is like 2 or 3 days longer than wire, but I just have them do it via ACH. I didn't set up the wire.
Yeah, no, I don't like the ACH.
Just want my
'cause
money though,
it's,
man.
So it's potentially 2 to 3 days, but if you read the fine print, they
Up to
say that they
10.
have up to 45.
Up to I saw up to 10. I didn't see up to 45. I mean, this
Yeah.
is I mean, I made several payouts. Usually it comes within a 5-day window. So usually if I do it Monday, I see it, by end of week Friday, or if not the next Monday. It's been 2 weeks so far, which is
Yeah.
the longest I've ever seen it. I'm at that 10-day point and I'm like, I just want my money.
Yeah, nope. Not
I got
messing with
shit
that.
to buy. Isn't it a
Probably
nice
waiting for a
feeling
couple of my,
trading someone else's money and getting paid and just freely being able to spend it on whatever you want? Such a great feeling. So take your payouts. Every few winning days and winning trades, you guys should be taking payouts. They even recommend that. It's like, obviously do it strategically to where you still have your cushion. But, you know, on a consistent basis, you guys should be taking some withdrawals, getting yourself paid. The other thing it does as well is it doesn't make you think you got wiggle room and a safety net and you can take more risk because you made $1,000. So, I can risk a little bit more on this trade. No. It helps you reset and stay consistent with what really works to get you to the point of, you know, profitability in the first place.
There's the little pop I was looking for.
I
All
only
right, so
got
I
one
just
field
adjusted.
too. I only got the one
Right?
field. Yeah.
I just adjusted my stop just so like this trade's completely risk-free
Risk-free.
for me and I
I
can
did the
allow
same
it to
thing.
play out. Screenshot of that's posted.
Same thing. You're up
Ideally-
150. I'm up 112. You got a little bit of a better entry than I did. You got about half a tick better than me.
Yeah, you have to.
Half a tick.
I'm
Yeah, I
pulling
did
this
the
up a
same thing
little
with my
bit
stop because I don't want to see it come back down to that level. I'd expect a pullback, maybe a higher low to push, but I wouldn't expect it to come back down to that previous low.
Oh,
So.
I pulled it too close. Oh, that was 125 added.
Nice. Yeah, I'm still live on it.
If it actually, so I'm gonna put my order back here. I've got an order still right above the 61.8 fib. Because I think we might see one more retest just a little lower before
Look
it
at
goes
you
up higher.
trading like an institution. You got a pending order, you ain't going to remove it.
That's typically how I trade. I identify my levels and zones and so on, and I'll set my order because I know where I want to get in when price reacts. And as soon as that order gets filled, my ATM strategy is set. So my stop is literally right above it. I'm risking $100, $150 a trade. But my trades are, you know, boom or bust. They're either working out or they're not working out.
Like
There's no,
instantaneously.
man, so I
love
don't
that
really
approach
want
to
that
trading,
wiggle
dude.
room, that second touch. Like if it comes back up and has a second touch, I might put a second order in to add to my position.
Yeah.
But my stop, I'm going to pull down to reduce the risk.
Those are like the best types of trades, the trades that you're so convicted in and confident on that it's a boom or bust, where you know within a minute it's either going to work or not. There's no second guessing. There's no 5 more minutes. Oh, maybe. No, it's boom or bust. Either going to work or it's not.
I got stopped out of that trade a little too early for trying to be a little bit too tight on my stops.
Yeah,
I didn't want to see it come
trailing
back.
mine now.
Hey, I hope it hits a new all-time high for you, to be honest.
Well, I'm trailing mine too tight to where I know it's going to get clipped unless it just goes straight up. But I'm trailing it like every point just to get clipped like that.
1600 on AMD. Way to trade Dantino.
Nice, man.
I wish I could react to your post, but I'm just going to reply to him. There.
We'll get there. We'll figure this all out.
I just need you to know it's not personal that you're not getting reacts like everybody else is. For some reason, there's a bug in the system that's not letting us.
Personal.
It's personal. We singled you out.
He can't hear you either. Anyway.
Oh, he can't?
No. So basic memberships,
I
pre-market
thought Fridays was
show.
free stream.
Yep, pre-market rundown show. Some training material, and then the chat rooms. So at 9:30, bye.
But so Friday doesn't free stream all day anymore, is what
No.
you're saying?
No.
Oh.
Not right now. I mean, I think giving access to the community rooms, 16 trainings that are 8 hours of really good education, and then the pre-market rundown, I think that's a lot for free.
Fair enough.
Yeah.
It is.
It's a lot. Now a free stream Friday, it's like might as well just give everything away at that point. No, but it kicks out right at 9:30. The stream goes blank. But hey, I mean, I can't tell you how many times that we've done a rundown show. Someone hits me up and goes, "Hey man, I made like $1,000 a day based on your analysis. Thank you." And I'm like, "Hey, it feels pretty good."
Dude, I see people posting that in the TikTok chat without even being able to see your screens or be a free
Just
member
listening.
over here.
Mhm.
Yep, just listening. I got to learn to trust myself more. That was one of the main things that I wound up putting on my affirmations thing when I'm in a trade. I've started telling myself to trust myself because this was a perfect entry. Probably going to see new all-time highs. I'm loving the price action. We're now holding the 38 to a support. You know, I stopped out. Why did I stop out? Because I was too focused on I don't even know what. The potential rollover, the fact that it's all-time highs, the fact that I'm short biased. I'm just talking
I
my
would say
emotions
you
out
saw
loud
an
right now.
opportunity to take your profit on a boomer bust trade, and I think you managed your trade correctly. I don't see that you deterring from your typical system. Now, if you had 2 contracts, you would have done different. You would have
I would've
scaled
scaled
out
out.
of one and stopped one, and you would have 1 run, but you don't have 2
That's probably the
contracts. You got
difference.
1. You want to secure a profit.
Yep, that's probably the difference right there. You hit it on the head.
The
Because
2
had I
versus
had the
1.
other one,
Yeah.
this one would have been running risk-free,
Yeah.
stops at break even, and it would have really started to print. No,
If
you're
my
right.
2
right
would have gotten filled, I would have done the same thing I did with the first one. Stops would have got me at the 120, 150 that I pulled, but then I have 1 completely risk-free.
I just got to say, Tom, it's really nice seeing you in Profits Chat day after day consistently lately. I know they're not big hits, but it's the consistency.
I mean, they're big hits. I
It's-
mean, he had a nice little 9 hundo from a fat
Oh, yeah, he
finger.
did. Look
Yeah.
at that.
Hitting
fat
too many
finger?
zeros,
All
but I'll
right.
take it.
I like it. I like it a lot.
Yeah, it's,
No, but you've been on fire. I've been seeing, $100, $200 scalps. Yep, there's the
Dude.
900 one right there. But you're
Base
also
hits add
posting your
up, man.
losses.
yeah, I
And
mean,
keeping the losses small, 150 minus.
just being transparent.
It holds you accountable. It holds us accountable. It's just it really does a lot for the trading going forward. Why is it so tiny?
The worst thing on that last trade, I got an awful fill. Could have been a whole lot better than it wound up being.
It happens.
Oh yeah.
It happens a lot. I mean, one of my trades yesterday, the fill was horrible. And I took like double the risk I thought I was going to take on the trade just because of the horrible fill. I was like, that sucks.
Yeah.
I was pretty much forced
And
to stop
I took
out
10
before my
times the
stop was
risk
hit
yesterday.
just to watch the trade rock in my favor. So
Hey Josh, what's your thesis on your shop swing? That too.
Yes, I mean right now, nice open push. That dump, didn't like the dump, but the simple fact that it held that 66.38 was a good sign, and you pushed from there.
Oh yes, come on down, fill my order, and then go up. You'd
And
be
I
awesome.
personally still see potential for this thing by early next week to hit 68. That's my thesis. That's what I see is like I find it to be very realistic for us to at least get back around $68 today or early next week. And I mean, I would just be in a position of scaling out, taking profits, at these upper levels for sure. And running stops at break even on a runner. Like I would start scaling personally up against yesterday's high-a-day resistance into this nice big push and this nice big pop. And then putting stops at break even on the runner and see if it runs to 68 next week. But when I look at it like intraday, what I'm going to go ahead and just do is I'm going to throw a small little zone up against that high day resistance from yesterday right here. The other thing that I would do as well is go with a fib from low a day to high a day and see that we're having a 38.2 retracement back into previous resistance. That could be new support. You see how we just had a nice little reaction off that zone. That looks good up against the 38.2. So number one, I would obviously be scaling out into these upper levels. Number two, I would still be managing my trade. The way I would manage this trade is whatever remaining position I had left, stops would at least be at break even. And the way I read it right now is I would still have a runner. I would want to see that zone hold. I'd want to see it hold above that intraday 38.2 and start to push. And if we do, continue to scale out little by little up into that $68 target. However, intraday wise, if we were to say crack below that zone and we see it retest as resistance, I wouldn't necessarily close my entire position, but I might scale out a little bit more, but still keep a stop at break even on whatever my remainder is. That's how I would look to probably, manage this trade if I was still in this trade. But at least stops are at break even, 100%. So you can let it literally just fade back to break even, and you're not going to lose anything, but you still make a couple of bucks on it. And it still gives you an opportunity to have exposure to this if we get the 68. I'd really like to see it hold that zone. And if it were me right now, hard stops on my runner, we crack below that zone and retest it, I'm going to take a little bit more off the table for some profit, but then still keep my initial stop down there at break even on whatever my runner is at that time. But still give this a chance to make its move on up towards around 68.
Scott's on fire too.
Cool, thank you.
Yeah, absolutely.
Scott and Logan come in, they do their own damn thing, they post up consistent, phenomenal profits, and then they go on about their day. I love it.
3 shorts in the combine on ES. No live trades for me. Just need to get back anything when I'm over my weekly goal. Dang, I like it, man.
You're not gonna fill me? A little bit lower to fill me, and then you can rock it up.
Got
I got
400
my
accounts. Nice. Nice little $100 on the SPY. Can dig it. Scalp on the SPY. Little 120. Good job, guys. You know, base hits add up.
not giving this much breathing room because I don't want to see a continuation to the downside, but it had finally come down and hit that 61.8 where I wanted my second order. Screenshot of this. Yes. This again, boom or bust trade. I don't really see this come down. Not giving this much room, breathing room at all. Going that up actually. Sorry.
And we're flushing pretty hard right now.
Yep. I'm just gonna close that.
So take a fib from low of day up to high of day as a reference on where we could retrace to before maybe seeing a little bit more upside. Same thing with the SPY. I would go grab a fib retracement down to
It's
low a
$15
day, drag it up to high a day. And here's the first thing that stands out to me is we had this daily zone of support resistance between 548.49 to 548.63. When I take a fib retracement from low a day to high a day, it's right at the 50% level. So right off the bat, got a daily zone of support and an intraday 50% retracement. That looks pretty nice. What else do I have? Anything else? The more reasons, the better. Where's my VWAP? And it's actually hitting the VWAP right now, so that wouldn't give me any confluence. Any kind of fair value gaps? I mean, yes and no. Yes and no, because technically this was your fair value gap, and right here was your, you know, quick entry in, quick entry out. I would already start to count that as an invalid one. So really all you have right now is a key daily zone of support that's in line with a 50% retracement, and it was where we had all that pre-market resistance. When we create that zone from the daily, we see that we just couldn't break it in pre-market. So all that pre-market resistance turns support, right? Daily zone of support and a 50% retracement. So with that being said, what's my next step, right? Market's coming to me. I've identified confluences. My next step is to get an idea of what side of the trade do I want to be on, long or short. Well, I see 3 things that suggest we can come down, hit this level, and bounce. So I would rather get long at that level. So ideal entry, target could be back up at high a day as a main target, and I would put stops just below that zone, right? So, you know, you can put stops under this little swing low here if you want. You can run 55 cents of risk for a 3-to-1. You know, I think this is a boomer bust trade in my opinion. So I would put stops below the 50%, below that zone, but still a couple ticks below, like the golden pocket, just in case we wick in. So actually, with that being said, I would actually go ahead and just put those stops about 55 cents away. Because, you know, I wouldn't want to get in, it come down to that golden pocket, and then shoot right back up, and I get prematurely clipped. So I'd want to give it enough breathing room, for example. So now I have an idea of where my optimal trade entry is going to be, right? Where my stop is, make sure I don't get prematurely clipped, where a realistic target would be. So I have a plan built. Now I can get positioned correctly. The next thing I got to wait for is just price action to validate an entry. So right now it's not. But it could, right? If this candle closes back above the 50%, back inside that zone, and the next candle opens and like taps that 50% and then starts to react, that would be a well-defined entry. But that last previous 1 minute candle closed below the 50%, closed below that zone. So right now, I have to wait. I need to wait for it to potentially snap back above that zone and then give me one quick little higher low off that zone to get long. So now we wait.
Just to add more confluence to that, that zone, well, right below that zone, there's an area of demand where that news started, basically at 9:55. Buyers stepped in so heavily we shot up on that catapult. I would consider that area potential unfilled orders, even though it's a 5-minute demand zone.
I like it.
It also lines up 61.8. Go ahead.
You said that lines up with the news, or no?
9:55, right before news drop at 10 o'clock.
Right.
I know you're not supposed to really apply that to news or trade through it and so on, but it's been my experience that right before the news drop, we typically see that consolidation and then an impulse rally in one direction or the other, and it typically retraces through that area before the continuation.
I just remember hearing something about, news kind of invalidating some of those moves as far as identifying them as supplier demand, just because.
On the daily, so I'm not going to use earnings, for example, to determine an area of institutional order flow. But this isn't
Gotcha.
institutional order flow either. This is a level that I found on a 5-minute chart. It's
Nice.
potentially a 5-minute demand zone of institutional order flow or retail. I don't know, but it's a potential area I want to keep on watch because I've noticed that news reacts tends to leave back unfilled orders. I'm not saying it's a guarantee. I can't, guarantee anything like that, but it is an area that I definitely want to keep on watch, especially when we have such a significant reaction intraday for a news drop like that. It's typically
Right.
a smaller hedge fund or a larger whale, and they will leave their orders until it comes back and retraces to that.
I want SPY to burn.
Yeah, so do I. I should have taken it short like I wanted to at the top. It's because I didn't take it short that it's just slowly steady falling since all-time highs. It's the one time that I didn't follow that.
I mean, if you're in a trade, I apologize.
No, I'm clearly not dialed in. The last couple of trades I took were apparently in my sim account as well. I just posted that. I'm up 137.50, but I was in the wrong account. So I do have a live order in my regular funded account now, set to fill. It's at basically the low of that spike, but it doesn't look like it's going to fill me. It's just kind of like
Crack and
cheating.
retest.
I went to my sim account last night on a trade that I was dead set on was going to do what I wanted it to do. And I said, you know what? I already did what I needed to do. I haven't been in my sim account in probably a month. So I took the trade on the sim account because I wasn't willing to give anything back, and it went against me. And I was pretty happy.
Hey, I've already done what I needed to do. Already hit my goal. You know what? It's a great setup, but I don't want to give my profits back just in case. Let's sim it. Dude, well done, man. That's a huge step in the right direction.
Good job, Kevin. Good job.
That's a really big step in the right direction, dude.
Oh,
To
100%.
recognize I got my money. I want to keep it, but I still want the experience. I want to take this trade just to see. Let's sim it. Good shit, dude.
And just for anybody
Yeah, it was
listening, that 5-minute demand zone that I found, it blew right through that. My stop hit immediately. That was a boom or bust. I think I lost $125 on that trade.
Yeah, at this point, no reason to get long. Came down to that zone, 50% level. Cracked below it. We were looking for the snap back above it to regain it with a higher low. That clearly didn't happen. We retested it and we flushed. Now we wait for that line in the sand zone to get hit and we go from there. Oh, yeah, and on a side note, I think the message got lost in the feed since we got a full house today, and then it looks like we got a pretty active chat as well. We're actually rolling out our pre-seed funding round for the further development of our startup software company, Market Chatter. You guys use it, but we're going to further develop it and then start to offer it to the marketplace as a white label solution. So for anybody that likes investing in, startups or just investing in businesses in general, like I do, just want to throw that out there. Maybe shoot me a DM, have a conversation. I can send you the pitch deck, all that good stuff. But that is official, and we are starting to roll that out here.
Yeah, I'm interested. That's exactly what I do. So
I
send
like
me
to
the
do the
info.
same thing. Yeah, man. Shoot me a DM inside of Slack. We'll get connected, jump on a call. Sure you have some questions and stuff, and I can get you all the information you need.
Love it. Well, you know what? I'll parlay that into our check-in as well.
Yeah, let's do it for sure. Just trying to get this thing to MVP. That's it. We're like 10% there.
There's not much I like about this stock. COF. Also seems to be in the two major groups. Retracement. Looks like we already made our retracement. I see a little more upside to this, but not past 143. 4350 area. Next major resistance. So screenshot click. And Zoom slows down everything. See, let me type. Really? That's not where the dollar shine. $11 o'clock. It's slowing down a little bit. Slow, slow.
Yeah, at this pace, I mean, not really. I mean, yeah, definitely this time it's gonna start slowing down. But I like the movement we have. If we get up to like 11:30 and we just kind of got like 30 minutes of tight consolidation, not really moving well, probably start wrapping it up at 11:30 today.
You know, the other thing to look at for next week, especially as we get through mid Tuesday, volume's going to start slowing, which could move. You could get, there's some trading opportunities because when you get slower volume, if buyers come in or sellers come in, you can get some, you know, decent moves.
100%. Absolutely. So yeah, shortened week next week. Wednesday is the half day. Thursday, the market's closed, and I'll probably be at the hospital anyway. So what great time.
Right.
Have a short week and
4th of July, baby.
Deliver the baby.
Just sitting here watching.
Is there typically a sell-off before a holiday week, like a 4th of July, for instance?
Not necessarily.
Not necessarily.
No.
Big money does excuse itself. Like volume will significantly drop off.
Sure.
But as far as like a major sellout or closing, they don't care. They've got the time to be patient. What's the quote Corey says? The market can remain volatile longer than you can remain solvent.
I haven't heard that one yet.
Corey.
Yeah, I mean, I was on the institutional side, some of the different companies I worked with, and trading comes to a screeching halt most of the time for the institutions around some of the really big holidays. So as you're leading into it, anybody who's worth their salt on Wall Street is already left for the Hamptons.
And Corey, I called you because I butchered your quote about the market can stay solvent longer than that whole thing.
The market can stay irrational longer than you can stay solvent.
That's it.
When it's like going up, like this morning, you're like, oh, it's got to pull back. I'm going to short here. I'm going to short here. Doesn't have to come back down. Doesn't have to do anything.
Got to go right.
That's right. That's it. So yeah, if you're like, oh, the market's really overbought or really oversold, this is irrational territory. I'm going to get the revert. No, it doesn't have to reverse. It can stay irrational for a long time.
Oh, that's the thing. The markets can stay in an oversold or an overbought level for a long period of time.
I mean, shoot, look at NVIDIA.
Yeah.
I mean, that thing was overbought for freaking 2 years, I feel like. If you look at the RSI.
Hoping that continues.
Same.
I'm hoping it drops because I want to buy it.
I'm hoping. I want to get in at a decent price.
Give me a starting at low hundreds, and I'm pretty good at that.
Anything under 110, I'm in.
Same, 100%. Anything under 110, I'm starting to scale into this. Absolutely.
Full port.
Full port? I mean, I'm going to full port the kids' account on this.
Nice.
No, I'm not. Honestly, I mean, it's not a bad idea. They'll be thankful. Thanks, Dad, for buying me NVIDIA. It's worth 10,000 a share now.
Lower day approaching on spot.
That would be what, 24 trillion?
What, market cap?
Maybe 50 trillion?
A lot more than that.
100
Yeah, if it
trillion?
hit 10,000
Yeah.
a share, it'd be much more than that. Or like
Right.
quantillions, whatever the hell it is.
It'd be beyond nosebleed territory.
By then, the Federal Reserve will be printing $20,000 bills, so it'll be fine.
Yeah.
Nice.
Or
They've
the
been doing away with
certificates.
paper.
All going to XRP.
Uh, this Santino, you're still here. You can hear us, right? I know he's not like in the chat able to hear us, but I'm pretty sure on TikTok he's able to hear us. I'm wondering if he took that trade. Josh, I do recommend giving your computer a good reset this weekend, though, for the simple fact that all
It's
of
going
this
to get a
stuff
good
is
reset. Yeah.
it's still there.
It's still there. And the last 3 days, it's taken me like 5 to 10 attempts of starting Zoom, shutting it down, starting it, shutting it down, just to get my screen share to work. So yeah, it's getting a nice reset over the weekend.
It should definitely allow me to erase my drawings.
Dude,
It depends on how long they're left there. Like if they're left there for more than 10 minutes, apparently they just stay there forever.
Unless I go through and hit the remove all drawings before I end the Zoom. If the Zoom ends and a drawing is there, it just does something to my computer. I don't know.
Don't like that.
You would think when Zoom's shut down that the annotations would also go away, but no, they just get stuck there. It's like, it makes no sense.
Yeah, they missed that on the update.
I guess so.
Boy, it would have been nice to have hedges today.
I know, dude. Yeah. I literally, I refreshed 20 minutes ago and it's still not there.
With this price movement, just another confirmation on things.
Let's go see if it's updated now. I'm curious, but I've been refreshing like every 20 minutes and it still shows that we have a 255 hedge pressure. I'm like, yeah, right.
Oh, short. It said 255.
Yeah, it said
It
255
knows.
short.
It knows.
Yeah, so it's showing I got a monthly hedge on the Qs at 160. Okay.
Yeah, that was back in what, 2010?
Yeah, 2010. And then I got a 266.50 weekly. I'm like, yeah, that's not right.
Yeah, so someone would see that and be like, oh, the market's going to crash. I'm shorting it.
Yeah.
Oh, excuse me. Didn't realize my mic was still on.
I just thought that was Corey.
My bad. No, Corey's right after lunch. He starts letting them all out.
Switches to soda. Just watching GameStop right now. Just curious.
Oh, is it moving?
No, it's not moving. It's moving sideways. It's
Aw,
up 10%. It's
man.
up
I was really wanting
10%.
to diamond hand into it.
No. So these are the weekly supply and demand zones that I found forever ago, but zoomed in on the daily. I'm going to post the weekly chart here. 1 second behind that. Again, it's hilarious to me that retail thinks they're in control of this. Back when he started tweeting again, I drew this chart and I drew these FIPS, and I have not adjusted it at all. Like I've just been reposting the same freaking chart. And it's very easy to see what GameStop's doing as it hits, the supply zone and the support zones, and it's making its little hiccup bounces. But as you see, lower high from the very beginning, lower high, each one of these spikes, lower high, lower high, lower high. It's just he used everybody for liquidity for his positions. It's disgraceful. I can't wait to see him get fined.
Company did that. Look at the different shares they put into the market, which they were smart to do to raise capital. But once they start doing that, it's going to be tough to move that stock in a real direction as a retail investor.
Oh yeah, no, GameStop did it brilliantly. They fully took advantage of it. They made bank off of this. They used everybody for liquidity. Like I absolutely love and respect what GameStop, the company, did with all of this hype. They made bank. They're going to be. I read a story. They can close all of their stores right now, exit all of their leases early, and still set up and run a business with what they did. Brilliant, absolutely brilliant. The CEO last time said, "Man, I wish I would have capitalized on it the time before. If it ever happens again, I know what to do." He sure knew what to do this time.
Yeah, well, that's why he dialed up Hello Kitty this last time around. All right, we need another.
We need some tweets, baby. Let's go.
Free games for life. I need you to put out this tweet. You ain't got to say anything.
Did you guys see what happened with Chewy yesterday when he tweeted?
I saw Steve posted the article. It rocketed sympathy. It was a cryptic
moonshot
tweet.
And then pulled right back.
Yeah, he posted up something like a dog or whatever, like something like, "Hey guys, go buy Chewy." They did, and he sell. Got out of that position too. Check. Like, show me on this chart where Hello Kitty touched you.
Hello,
45% on Chewy. That's part of my retirement account. People love their dogs, man.
Yes, they do. I mean, I got a Chewy subscription. My in-laws got a Chewy subscription. I mean, everybody I know, they got a Chewy subscription.
Boom, done.
I have a question, Josh, before you take off.
All right, guys, I'm going to go ahead and take off. Have a good one. What's up, man?
At what time did you close out your Shopify trade yesterday? I just want to see if I dialed mine in correctly as well.
Yeah, I remember it based on the chart.
I closed mine out at saying 1431.
I was looking at a 5-minute yesterday, and it was right through this region here when I closed it. I was starting to see the double top, the lower highs, strong rejection, starting to get pretty weak, and I'm like, that's not really what I want to see coming into the end of day. I closed it right here at 350 as it was starting to kind of like get that initial sign of weakness, rolling over, and possibly dropping on off. So it was right here on that 5-minute candle at 350 yesterday.
350, that'll be what? Because on my end, I mean, on my shows that I closed mine out at 1431. So what is that? 231?
1431. So what, your time? 1431 or market time? 1431.
I'll say market time because
market time. Yeah. So yeah, if we're always speaking market time, that's, basically the times that, I always speak of, because I'm Eastern, I'm market time. So if we're always looking at our charts and they're set to like market time, 9:30 to 4, the times you give me will be accurate based on New York Stock Exchange. So if you closed it at what time did you say? 14 what?
31. So that'll be what? 231.
31. Yeah. So like right in this region, you closed it.
Yeah, the same thing. I saw the double top, and I mean, I just didn't see it just keep going back above. So I just said, you know what, it's gonna probably start making lower highs after that, and that's when I closed it out.
You start to see that lower high, right? And I'm like getting concerned here. It drops down, didn't flush, bounced back up. I'm like, okay, we could see upside. Then we had that 5-minute rejection. Then we really start to break down below those lows. I'm like, yep, that's the start of a potential reversal. Let me get out. Not really looking strong enough, even on that 5-minute into the close. That leads me to believe that I want to hold this into the next day. So that's where I closed it right there. Did I leave a little bit on the table? Sure, a little bit. Nothing crazy, but it was a good trade.
No, yeah, I made an error again. I first jumped into the trade. I thought I had it on calls. I had it on puts, and I quickly
We've all made that mistake at one point, man.
Yeah, that's 2 times though.
Let's get the
That's
mistakes out of the way with
this
fake
month.
money. Yeah, because if we're gonna make them, let's just get them out of the way with fake money. But yeah, I've done that several times, even to the point where I'm looking at the SPY and I forget to update my order entry box to the SPY, and it was on Tesla one time, and so I jumped in with like 30 calls of Tesla, thinking I was getting on 30 calls of the SPY, and that didn't really pan out well.
Yeah, no, luckily, I mean, it didn't move quick. So as soon as I saw something different where it's moving up on Trading View, but my Webull account is going down, I'm like, no, I did this before. I quickly
you
looked and I
recognize
said,
it. You're
yep,
like, yep,
I
let me
put
close
puts.
it.
So
Yeah.
I quickly canceled that order, sold it at market price, and then I saw it was still intact, and then I jumped in
You
and
jumped into the call side.
I almost did that thing what you did today, where okay, I just want to break even from what I lost, and I said, okay, I'm gonna break even. Let me look at the chart now, and I said, okay, I'm just gonna manage this one contract and just keep moving my stop
Manage
loss.
it. Yeah, don't
Little
look at the
bit, a little
P&L,
bit,
manage
and-
the trade. Yep.
Yeah, no, I made profit on that one trade.
God. That's the right step in the right direction, man. It's just like one thing a day, man. It's like 1% a day. We're just trying to improve. That's it. We're not trying to master this in a day. It's just like we're just trying to improve 1%. That's it, 1%. And when we really look at it in terms of just 1% improvement per day, that's really not asking for a lot. It's really not. 1%. And just let that compound over the duration of 30, 60, 90 days. And then you look back, you're like, oh shit, night and day difference. You're only focused on, in the moment, 1% better. Just compound that out over, like I said, 2-3 months. You start to see a noticeable difference at that time.
Yeah,
Baby steps, man.
No trades today so far.
Yeah, I've only had 3. Small day. My mindset was capital preservation coming into it. If I would have managed the SPY a little bit differently, could have probably extracted more from it. But, you know, I was too busy looking at the P&L just to get back to break even from the mismanagement of NVIDIA. And so I take it as it is. You know, pretty much break even between those two trades after commissions and fees, maybe slightly green. Then I had a small like 150 trade on the SPY long. That's about it. So just adding a little bit to the bottom line.
I got a red day right now that'll make Corey proud. So,
$5.
well, 125 negative, but
Good.
yeah.
Small.
Yeah, nice small discipline. And I was typing it up in chat, but I'm definitely not dialed in today. The couple trades I thought I was taking in my live account, I took it a sim account to begin with. That's the 137.50 positive I got. So I'm just like, you know what? Sit with this red day. It's a good red day. It's not a red day. I'm going to stew over all weekend, over double the daily goal for the week. Like, I'm just
It
gonna
was a
sit
good
back
week
end
this
of the
week
month,
across the board
enjoy.
for everybody. Really strong week, guys.
The only potential trade I see coming up is a retest of this 50% fib that we drew, low day to high today.
Yep.
For a continuation to the downside, or obviously if we break and hold the support, a continuation to the upside. But at this point, I definitely feel like I've already missed the major moves, and I'm fighting more retail aftermath than I am the crucial AAA setups that we identified already. The short from the top, the little long that we attempted to take, they give us a quick little pop, nothing, no follow through.
Yeah, I agree. I agree.
Also, I'm hungry and want to go enjoy the weekend at this point.
I'm not gonna lie, I'm kind of hungry too for some reason. And I
believe today
normally
we
get
have
hungry at 11 o'clock in the afternoon.
We have a meeting with Corey today, right?
No.
Yeah.
So
Nope.
Yep.
Yep.
Every Friday at, what is it, 1:30 or 2?
2.
2?
Clock.
2. 2 o'clock.
Be there, be square.
2 to 5.
Chris's is 1:30. That's what it is.
everybody's welcome to come in.
Yeah, the calls are
Sure.
good. It's the Friday Reflect and Project. So the main theme of the call is basically, you know, discuss certain things that maybe you face this week that you can use some clarity around and some guidance, and really just being able to reflect upon your week, the good and the bad, and really take the good and really just, you know, apply that coming into the next week. And that's really the discussion, the topic. Now, if you guys don't have anything to talk about, you know, you always jam, throw the charts up, analysis, do some education. It's awesome, but yeah, it's a good way to come in and kind of just spill everything out as far as what went on this week and really just focus on the positives, reflect upon that, and start to project that into the next week with a little bit more structure and guidance on where should your head be for the week to come.
And I got to get my hair cut this afternoon, so I got to be like hard out at 3 o'clock.
Ooh, haircut.
Everybody
So
show up and
we
ask
will fire up right at 2.
Yeah, and you got to make sure you leave this Zoom before you can go to the other Zoom. So this one's always open, 7 to 7, but you got to leave this one before firing the other one up. And that link is posted 15 minutes before the session starts and right when the session
I meant to ask you,
starts.
do you care if I use this at nighttime? Because it lets me join this at like 9 p.m.
Do what?
Can I use this with members at nighttime?
Yeah, I mean, I see sometimes you guys fire this up at like 9, I think, and it still fires up because you are set as a as an admin.
Oh, that's what it is. So I pop in and I'm like, should I use this? And then I go make a little huddle thing in Slack. But I'd much rather
You
use
can
the
use the
Zoom.
Zoom. That's fine. And I know you're mindful of this. This goes for everybody else. It's just make sure that it's still kept professional. If
Oh,
you have
certainly.
a random straggler come in, that's it.
But it's not like being recorded and uploaded to chat to watch later.
No. Yeah,
Okay.
so I do all the recordings through different software, so the Zoom should never be recorded here.
Okay.
Yeah, it's not being recorded at all. Yeah. And it's not being streamed. It's literally it's a Zoom session with whoever's in it. That's it. No one else sees it, hears it. There's no recordings to it. It's completely private.
Okay.
Yeah, the only reason
Just
it's
gotta be-
streamed now to the main group is, again, if someone can't necessarily get into the Zoom today, they can still, follow along in the main group, and all this is being pumped to Market Chatter. So yeah, from 7 a.m. to 7 p.m., that's when it's pumped. All the audio, it's going through Market Chatter. Before and after that time, it's completely private.
So can I address TikTok since there's
No.
nothing else going on at the moment?
Mm-mm.
Come
Yeah.
on, let me talk to TikTok. I promise I won't
Yeah,
get you
man.
banned this time.
Yeah, because I'm going to start wrapping it up here in the next couple of minutes anyway, so shoot.
So TikTok, I noticed that there's a lot of you that have been in here since the morning. You're asking questions. Some of you are having conversations with yourself. You can make a free membership at marketchatter.io and talk with the rest of us and come in like Dantino and some of the other ones like H, etc. Get feedback, get answers to your questions. You can actually see the screens during the pre-market rundown. And then you don't have to talk to yourselves in a TikTok chat. You can actually be around other like-minded traders and not people who are coming in saying GameStop to the moon. Like, you can actually really get some education, not to mention the free lessons, everything else you get that comes with that. But it's free. So I don't see why y'all are still on TikTok.
It's freemium. It's free premium. Premium. I like it.
But I'm gonna post that link in the comments for y'all. I can't actually pin it because it's a website and TikTok doesn't like that, but that is the website
Boo.
that we are all doing business on, that we're all talking, trading, sharing, collaborating, etc. So figure some of y'all will definitely enjoy that.
We all learn off of each other, so y'all are welcome to join us, man. We need everyone.
No problem, okay.
All right, final questions, comments, concerns. Let's get them addressed. Let me know. If not, it's 11:30, and we usually start wrapping it up around 11:30 on Fridays anyway. I don't know about you guys, but I like starting my weekend early, going from there. So, yep. Questions, let me know. If not, we will wrap it up and go on and enjoy the weekend. And do not forget the call at 2 o'clock with Mr. Corey.
And then Josh, we should have a call sometime before the baby comes.
Yeah, so I'm going to jump on a quick Zoom, 45 minutes, an hour. So put me about 12:30. I should be available if you want to jump on, 12:30ish.
Yeah, so that sounds good.
Okay.
And you're gonna reset your computer after this, right?
Tonight, when I shut down the stream at 7, I'm going to reset the computer. Yes.
Oh, tonight? Well,
Tonight, yeah, because I run the stream from 7 a.m. to 7 p.m. for like the scanners, so people can see the scanners and hear the audio from your guys' conversations. But yeah, I shut that down at 7, and that's when I'll reset at 7 tonight.
well, I'm not a resource. Have some fun until you say woo.
I'm out too, people. Good. Great week. Great hanging with you.
Pleasure as always, Raul.
Yeah, it was a good week.
It was a really good week across the board, guys. Job well done.
Mr. Hal, my best trade ever by far. It was in my sim account, but still excited. You should be excited.
Whew.
It doesn't matter if it's in a sim account or a live account. If you can do it in either, you can do it in either. And that's the point. So congratulations on your best trade ever. Many more to come.
They can't hear you.
Oh, well.
Remember free memberships? Anybody that doesn't have a badge, they can't hear you.
Didn't even. Well, I can react to it.
You can react to it. You can reply to it. You can transcribe.
I can't react to Dantino's.
That is weird. Maybe it's just a Dantino issue. I don't know. That is very odd.
That's why I assumed he was a membership. Oh, well, I hope TikTok heard that. He's on a free account. He just made a 27% return on SPY, his best trade ever. I ain't got nothing else. I already drew on your screen. Woo and all that. Y'all stay blessed.
Woo, woo. Yep. Have a blessed
y'all
one,
on
guys. Take
Monday.
care. Enjoy the weekend. And I'll see you back here Monday, unless I'm in the hospital cutting some umbilical cords. I'll let you guys know. And hopefully I'm cutting something else. Really what I'm looking forward to here. So we'll see. All right. Peace out. Have a good one, guys. And have a blessed weekend. Let's end it like we always do with a big ol' Alpha Day trading for now. Then it's going to be, let's just end it with a big ol' nothing. 3, 2, 1. Yeah! Woo! And then you got my kid upstairs yelling it too. I freaking love it. Good job, baby. Yes. All right. Take care, guys. I'll see you then.